Good afternoon, everybody. Good morning, good evening, depending upon where you're all logging in from. And all very welcome to this online short course on diamonds from exploration to manufacturing, which will be held over the next 2 weeks. So before we get into the housekeeping, I'd like to acknowledge all of our annual event and student sponsors. We are so grateful for the support that you've given us for this event, and your generosity has enabled us to sponsor some 32 students from around the countryside. Please look in the delegate bag. The link is in the chat box to the sponsors. Again, thank you very much. Now, I'd also like to thank the organizers of this event, specifically John Bristow, Gert van Ekkerk, the guys from the OGG and SADPO, all put in a great deal of time and effort to make this event possible. And especially to John for putting together a really spectacular lineup of speakers, both local guys as well as international. And also to all of you speakers, thank you very much for donating your time and expertise to this event. And also a special thank you to the ladies from the GSSA, that is Lally and Marlies, who've been responsible for the admin and finance. Almost like herding cats, but they've done a wonderful job of it.
Excellent. All right. Well, thank you very much, Tanya. Thank you to John. I know a lot of work went into setting up this program, so hopefully it brings some positive attention to the industry, and coming off a very strong 2021, I think the timing couldn't be better. So I'm going to give just a brief overview. I'll talk about the supply, the demand, fundamentals of the industry, maybe talk about prices a little bit, and then we'll leave some time for Q&A. So I guess just maybe first touching on the elephant in the room. The impact of sanctions on Russian diamonds. This is a big deal. I think it's going to fundamentally change the industry. Russia accounts for upwards of a third of global diamond production by volume. So this is a big deal. And just maybe to kind of tune anybody in that's not very familiar with the details. It started in late February. The U.S. imposed sanctions primarily targeting Alrosa, the large Russian diamond producer, and related investment in that company. And then in March, the sanctions escalated to cover Russian rough and polished diamonds. However, this did not cover Russian diamonds that are manufactured or cut and polished outside of Russia and sold outside of Russia. So you may have heard some of the dialogue surrounding that and the implication on that and the nuances around that. And then most recently, Alrosa was placed on the SDN list here in the US, and that essentially prohibits Americans from doing any sort of business with Alrosa or any of its subsidiaries. And then there's been kind of secondary effects, given that diamonds are typically traded in US dollars. Other secondary sanctions have really made it difficult to transact Russian diamonds in US dollars. And, in recent weeks, I would say since kind of the end of May, most of the traditionally scheduled Russian diamond sales and contract tenders have effectively stopped. There are some private one-off transactions that are happening, but most of that regular flow of Russian goods has stopped in recent weeks, and it's unclear when that flow is going to reopen. And when we kind of look at how this is impacting the supply chain, the manufacturers are towards the front end of the supply chain. So we're primarily talking about the companies that buy rough diamonds and they cut and polish those diamonds. A lot of that business takes place in India. And there's many companies in that segment of the supply chain that are having difficulty getting sufficient supply of rough diamonds, and there are shortages noted. And a lot of these manufacturers have to cut worker hours, cut the work week, so they're working through this difficult time right now. As far as kind of the downstream and the retailers, I think it really hasn't been felt, by that segment yet. The supply chain, usually takes, say 3 to 6 months to get a diamond that's mined to the consumer. So I think as we get towards the second half of this year, the impact of this supply disruption will be felt throughout the whole supply chain. And then I just have a chart here that I thought would be interesting. This is basically showing goods that are primarily produced in Russia, and they're the kind of the smaller, medium-sized, gem near quality goods. And since the sanctions were implemented, this category of goods has outperformed. And this is kind of the idea of this chart. This chart goes back to a starting point of October 2021, but you'll see kind of when you see the pink shading, that's when the sanctions were implemented. And all of these noted categories have outperformed on a relative basis. The dark line is the consolidated or the overall market. So I think this is showing that the sanctions are directly impacting certain categories of goods. So now if we kind of take a step back and just kind of look at the longer term, diamond mine supply, fundamental situation, I think just to kind of give a quick overview that the market was oversupplied for most of last decade. I think that's kind of what put a ceiling on prices most of last decade. And I would say the most recent high watermark in production was 2017, 2018. And since then, there's been incremental decreases in supply. And I think this is as simple as, prices weren't really strong enough to lead to new exploration, development of new projects. Legacy, there's been multiple legacy mines that have reached the end of their life. So there really hasn't been a way to kind of add new production to offset the declining and the halted production of some of these older mines. And because of that, we went from a multi-year high in production in 2017 to a multi-decade low in production that was kind of hit in 2020. That was in part due to production delays related to the pandemic, but the longer term trend of lower supply was already intact. And going forward, I think we're going to remain well off that 2017 high in production for the foreseeable future. I would say for at least the rest of this decade. And then I think if we just, we also look at miner inventories, they're the lowest in years. There was definitely a shortage of goods, late last year into early this year. And then the sanctions kind of have further complicated that scenario. And then I would just note that the Luashe mine in Angola, it's the Luli pipe, it's kind of what it's referred to as locally. That is the only major new diamond mine that's kind of being developed and expected to be put into production sometime this decade. Notably, Alrosa is one of the primary partners in that project. So kind of given the complications around how the sanctions are impacting that company, that could lead to delays of that project. So that's something we want to keep an eye on closely. And this is a visual representation of kind of what I was just speaking out. So you'll see production hit an all-time high, around 2005, and then kind of when the global financial crisis hit, 2008, 2009, production fell off, and then we kind of got that that surge in supply, and towards the end of last decade, there were multiple new mines that commenced production, and then the pandemic hit, and that's kind of when we got back to that multi-decade low. And going forward, I expect to be in that 110 to 130 million carat range for most of the remainder of this decade. And I thought this is kind of interesting to look at. So when we look at where supplies, going to come from, and I would say that in the medium to longer term, it's continued investment, capital investment in some of these legacy mines. And you have these tier one asset, these world-class diamond mines. They represent a small percentage of mines represent a significant portion of global output, and you continue to see significant investment in these mines. A lot of them are listed here. All of the mines listed here, except for two, are legacy mines where there's been significant investment and expansion. Again, there's just not a whole lot of brand new projects coming online. So the core of production is going to continue to be these older legacy mines. And you'll see most of these investments have taken production out, over the next decade and some beyond that. But for the most part, we're going to need to, see significant capital investment to even keep a lot of these mines going beyond 2030. Looking at the midstream, so again, these are the cutters and polishers. Most of this takes place in India. When we looked at, the oversupplied market for a lot of last decade, saw a similar phenomenon in this segment of the industry, that the midstream and the manufacturers, a lot of them had excess supply that they accumulated early last decade, and through mid to end of last decade, a lot of this supply came online, and again, it kind of put a ceiling in diamond prices. I would say the market was oversupplied, but there have been fundamental restructuring of that segment of the industry, and it's in a lot healthier, more stable place now because of that. And you look at the way that say that the Beers No Roast are kind of working with their client to try to make the supply chain more efficient. They're trying to allocate more goods towards manufacturers that add value, that actually cut, polish, and sell the polish, versus say the companies that are more interested in kind of trading or trying to flip or speculate on rough. And I think we're starting to see kind of the impact of these changes play out. The manufacturing segment of the industry is probably the most profitable that it's been in quite some time. And we'll kind of see this on the next page here. So this is my estimation of manufacturer inventory. It's a very difficult area of the industry to analyze and to quantify, but this is kind of my best analysis of it. And that pink line, that pink highlight, is kind of where I think the midstream inventory needs to be to kind of be in a healthy, fundamentally balanced state. And you can kind of see middle of last decade, the market was oversupplied, and then towards the towards the end of last calendar year and early this calendar year, there was a lot of restocking following a very, very strong 2021. And the industry was fully stocked earlier this year. And then I think when we got into the situation in February with the sanctions and the reduced supply, the market was already fully stocked. And I think that's why we didn't see a huge surge in diamond prices in February, March, April, like maybe we saw with wheat and oil and some of the other commodities that were directly impacted by the circumstances. So I think now we're starting to see the impacts of that on supply, and I think that's why you're starting to see midstream inventories kind of fall back again down into that level where they're properly supplied. Looking at the demand side now, when we look at global diamond jewelry demand, the market has been growing at I would say a low to mid-single-digit % rate for most of last decade. The pandemic hits, and obviously it took a material hit to global diamond jewelry demand. Jewelers around the world were closed. There was economic uncertainty. However, I would say kind of starting in the second half of 2020 and into the holiday season, Q4 2020, diamond jewelry demand, rebounded very, very strongly, and that of course led to a record year in 2021. And I think this was, there were many reasons. There's always many reasons, but I think a lot of it had to do with stimulus and consumers, having money to spend that they weren't spending on travel or dining or other service-related expenditures. So people bought luxury. They bought hard luxury. They bought diamonds. Diamonds did especially well. And that kind of carried to calendar Q1 2022. A lot of the jewelers continued to see that momentum into early this year. Now we're getting into I think a much more complicated macroeconomic situation. All of this liquidity and all this stimulus that went into the global economy in 2020 and 2021. Central banks around the world now have to rein that in. And given that we have inflation at multi-decade highs, there's real pressure to do this more swiftly than in the past. And in the past, when central banks kind of would tighten economic conditions, and if it was kind of spilling over to employment, you know, a lot of times you would see central banks kind of hold off on the tightening and kind of allow the economy some time to recover. This time is different because the inflation is a real problem, and they don't really have the luxury of kind of switching the policy narrative until inflation comes down. And I think that's why there's a lot of fear in the market right now. If we look at, you know, why the stock market has sold off so sharply, it's interesting because kind of you look at the stock market and it's implying, you know, an economic catastrophe. And I think when you talk to businesses, I think they are seeing some slowdown, and there's concern that, you know, the slowdown will accelerate and consumer sentiment is falling. But I think when you talk to businesses, I think the actual consumer environment is not nearly as bad as maybe the stock market's predicting. So we'll kind of see how this plays out. But again, we do have an unusual macroeconomic backdrop, given that inflation is such a problem, and given that central banks are tightening economic policy, you know, while the economy is slowing. So it's kind of unusual circumstances from that standpoint, and that is going to spill over to diamond jewelry demand. We'll just we'll kind of see how severe that becomes. But right now, most of the jewelers say they are seeing some slowdown, but probably not as severe as you think it would be if you're watching the stock market. I think if we look at demand kind of longer term and kind of, you know, changes to consumer demand, right now the U.S. is the largest diamond consumer, you know, diamond jewelry consumer in the world. Half of global diamond jewelry demand comes from the U.S. China is the largest, fastest growing market. And it's probably approaching, you know, 15, 20, 25%. India is a huge market with a lot of potential. India has a billion people plus, with a penchant for luxury and jewelry, and they like natural diamonds. And I think, you know, within the next decade and a half, I think if we look at China and India combined, those two markets could actually outpace the US. That's kind of an interesting trend. Again, we kind of see US as kind of the core consumer market, but you have China and India to a lesser extent right now being the fastest growing large market. So that's something you want to keep an eye on. And then I think just maybe looking at the way that kind of jewelers are modernizing and kind of changing how they sell their product. You know, a lot more companies are selling diamonds online, and they're using the physical stores maybe a way to kind of market their brand and kind of immerse, you know, consumers in a brand. And I think once, you know, the jewelers build that loyalty with consumers, a lot of these consumers are buying diamonds and jewelry and other luxury items online, which kind of, you know, seemed unthinkable a decade and a half ago. So you kind of call this an omni-channel strategy, and again, it's kind of integrating kind of, you know, virtual and e-commerce with the physical store experience. And it's interesting because the traditional brick and mortar jewelers are, you know, spending money investing on online and digital, you know, distribution expansion, and then you have the traditional online jewelers are actually doing the opposite. They're investing in physical brick and mortar stores. So it's kind of interesting to see how that plays out. And I think this is, I think, one of the most interesting charts in the industry right now. This is Chow Tai Fook. That's the largest jewelry chain, the largest corporate jewelry chain in Greater China. And they're aggressively opening stores. They continue to see, you know, major expansion potential in China. And this chart just shows you how many new stores. So all the way on the right, that red bar is the company's fiscal year, which ended in March 2022. And you could see that last year alone, they opened twice as many stores as they did in 2021, 2020, 2019, and kind of going all the way back. You could just see the surge in new store openings, and they're opening stores in these smaller cities. But in China, a lot of these smaller cities still have 1 million plus people. So the point being here is the growth potential in that Chinese market is, you know, continues to be very, very exciting. And And it's going to be one of the major growth drivers for diamond jewelry demand going forward. Looking at maybe how all this is impacting prices, again, I think the market was oversupplied for a lot of last decade, and that put a ceiling on prices. Prices, did sell off obviously in 2020. There wasn't much of a market. The major miners really didn't make sales into the weak market. They kind of held and built inventory, which was the right thing to do, because when demand surged in 2021, they were able to kind of sell off that inventory in a much stronger market and at a better price. And diamond prices it kind of reflected the demand that we saw in 2021. And according to my own rough diamond index, you can kind of find a link to that on the presentation. You can also navigate to it from my website. But according to that consolidated index, rough prices made a new all-time high in January of 2022. And that kind of took out the previous high, which was in the first half of 2011. So that was kind of a significant milestone for rough diamond prices and kind of for the index that tracks that. And again, going forward, I think in general, the supply backdrop remains favorable for prices for, I think, definitely kind of the short and the medium term. It's just a question of what's going to happen with demand and kind of the macroeconomic situation that I was talking about before. And then just, I think one other thing that's worth noting is you look at, inflation around the world, and obviously this is in fact impacting diamond mining companies as well. They use fuel, they use diesel, labor prices are going up, consumable prices are going up. If you're doing any kind of construction or CapEx project, costs associated with that are up, significantly in just, recent months. So I think if anything, we're going to see support in diamond prices just because of inflation, and the cost of produced diamonds is going up with inflation. I think you're going to see that, reflected in rough prices. This is a longer term rough diamond price chart relative to inflation. So the dark line is the consolidated rough diamond index. That light gray line is in US inflation. And you can kind of see that, diamond prices have held up with inflation over the longer term, but it's kind of been a volatile ride, especially in that post 2005 era. And maybe just a quick few points here on man-made diamonds and how that's going to impact the natural diamond market. This is something you definitely want to keep an eye on. It's a new product. It's an exciting product for a lot of people in the industry. A lot of consumers like it. It seems most consumers like it because of the lower price point. I think as the product matures, we're going to continue to see the price of man-made diamonds fall, especially relative to natural diamonds. Lab diamonds are a manufactured product. We, in theory, could produce as many as we want. The production technologies are improving. And again, I think ultimately this is going to result in lower production costs of man-made diamonds and overall lower prices of man-made diamonds. So I think when we see that price differentiation widen further, I think it's going to, it's going to maybe change the way that the industry and consumers think of lab diamonds versus natural diamonds. And I think, at least in the medium and longer term, I think we're going to see most lab diamonds sold as, lower price fashion jewelry that maybe competes less with natural diamonds. And this is a table I put together of, just a sampling of, large jewelry retailers in the world and whether or not they're selling lab diamonds now. And if they are selling lab diamonds now, are they marketing it as bridal jewelry? So I think kind of what you see here is when you look at kind of maybe the low to medium tier companies that in the past have sold, man-made ruby, emerald, sapphire, or other man-made gems, they're also selling man-made diamonds. But I think when you look at the real high-end jewelers, they, are not selling the product. And I think when you kind of hear them talk about the product, they say their customers still want, natural precious stones. So it's kind of interesting to watch this evolve. I think that if we're looking at retailers, I think the most important thing going on right now is Pandora. which is a fashion jeweler. They have a global presence. They have like 6,500 stores. They have a big distribution channel. Within the last year, they announced they're going to launch a lab diamond jewelry line. And they said that they want to make diamonds available to everybody. They want to democratize diamonds. And I think that's kind of, I think, a proxy for what we're going to see, you know, for this industry going forward. I think you're going to see a lot of these man-made diamonds marketed as a lower price alternative to natural diamonds, you know, perhaps targeting a different customer altogether. And just maybe just one more kind of thought on man-made diamonds and kind of looking at how supply stands up to natural diamonds. So I think if we look at the man-made diamond jewelry market, man-made diamonds, you know, represented, you know, zero, nil, you know, almost none of the market, you know, 5 or 6 years ago. Today, I would say lab diamond jewelry, you know, represents a high single digit, maybe 10, even 11% of global diamond jewelry demand. So it's growing rapidly. And again, I think as a product matures, I think the way it's marketed and positioned is going to change. It's going to continue to evolve. But again, it's a segment of the market that's growing quite quickly. And De Beers is involved now, and they have their own lab diamond jewelry line. And I think they're using that, you know, as a strategic tool to try to frame the product in a way that they think it should be framed, again, which is kind of more of a fashion jewelry, lower priced product, linearly priced, meaning that the larger the diamond, it's still going to sell for the same price per carat versus a natural diamond, where the price gets exponentially more expensive the larger it gets. And again, that's because of the distribution that nature provides versus the distribution of the size distribution of a lab diamond, which is a manufactured product. And I think this is the last chart. So this is looking at lab diamond prices on relative equivalent terms versus natural diamonds. So you'll see on kind of the left side of the chart, you know, middle last decade, lab diamonds sold for maybe 10-15% less than an equivalent natural diamond. Now you're kind of seeing them fall, you know, as much as 70-80% less than an equivalent natural diamond. I think this is most apparent in the larger sizes, I think, for the reason that I was explaining before, that with natural diamonds, the larger the size, they become exponentially rarer. With manufactured diamonds, you know, to a certain extent, the grower and the producer can produce in the size that they want. And I think this will get you know, easier and easier for them to do as the technologies continue to evolve. And I think that's reflected in the prices here. Okay, this is actually the last chart. So just maybe just a few points here on innovation throughout the supply chain. You know, traditionally the diamond industry doesn't have a reputation for being innovative, but I think when you look at all segments of the supply chain, you'll see that there is a lot of innovation happening. And you know, whether it's upstream with De Beers carbon capture, which is basically a way to crush kimberlite into small pieces with a lot of surface area and actually use that to pull CO2 out of the atmosphere. You have De Beers Parent Anglo American is kind of leading the charge with hydrogen fueled haul trucks. You look at, you know, Tomra and the XRT and some of the other companies that have X-ray transmission, which is reducing, I would say, the waste and recovery. It's leading to, I would say, the production of more larger diamonds because they aren't getting crushed in the recovery process. So there's some really interesting things happening there. You have a whole lot happening with, you know, supply chain provenance tracking and trying to use the blockchain and some of these other technologies to track a diamond all the way from the mine source and kind of provide that information to the consumer. And I think that solves a lot of problems for this industry, you know, as far as providing customers with transparency that they need to feel comfortable buying a diamond. And then downstream, I think I talked about some of this before, but just kind of changing the consumer experience in store and kind of trying to integrate the online with the physical footprint and kind of bring the two together to give consumers what they want, which is you know, being able to research you know, a diamond online and then maybe come into the physical store to make the actual purchase. And that's I think the last slide I have. This is some information if you kind of want to track what I'm doing. And with that, maybe I'll pass it back to Tanya or John. I don't know if we have time for Q&A, but whatever you guys want to do, I'm happy to stay on.
Well, thanks very much, Paul. That was a fascinating view of the industry. We've got plenty of time for questions. So if you want to put your hand up, please do so. If you are technically challenged, just open up your mic and ask a question. Or put something in the chat if you'd prefer to do so.
Paul, maybe just to get the discussion going, I mean, with the Russian production now sort of being embargoed, and is it going to also be sort of absorbed or purchased by the Cochrane and kept by the, I guess, Russian finance department, or what do you see happening there? Yeah,
so there have been representatives come out and say that they kind of are looking at that as an alternative if they, have a situation where they can't, sell goods into the market for the remainder of this year. I think we've seen that in the past when there has been circumstances where, they had difficulty selling goods, whether it was a global financial crisis. They considered it, during the midst of the pandemic. They didn't go through with it, but I think they see that as kind of a backup plan. But I think longer term, I think what we're going to see is a segregation in supply in the market. So I think manufacturers are going to segregate, Russian and non-Russian goods, and I think they're going to send the non-Russian goods to their Western clients that are requesting that, and then I think the Russian goods will probably end up in markets like China, India, the Middle East. I think kind of maybe similar to what we're seeing with kind of the flow of oil right now.
Yeah. And your view on the Lucia deposit, I mean, is that a reasonably good quality mine? I mean, there's not a whole lot of information out there, but it seems to have the right metrics. I mean, you were in Angola last year, and what was your view on it?
Yeah, I mean, I think it's certainly real. It's big. It's world-class in size. Katosha, I mean, it's probably, of similar, scale to that. Similar grade and probably a relatively similar, quality of diamond. So I think at this point, it's just a question of getting it built. And I think we know with any kind of project that large, it takes some time, and there's always inevitable delays. And I think now, given that Arosa is the major partner with Endiama in that project, there could be delays related to that. So we'll just kind of have to wait and see. But I mean, it's a significant supply catalyst for the industry. I think again, that's the only major project coming online this decade, and I think the industry needs a significant source of new supply to offset the legacy mines that are reaching depletion.
Absolutely, and I guess, Brooke, do you want to kick off? When's your new discovery coming out of North America?
Can't really talk about it. That's top secret stuff. But yeah, I had a follow-on to John's question. There are reports. Is there a lot of the Russian production is making its way to India, and have they started segregating the production yet? Because I know in the U.S., technically, people are allowed to purchase Russian diamonds that have been manufactured in India, but there's a real pushback to not want to do that by people like Tiffany. Do you have any more comments on how much Russian production is making its way to India, or is that not really well known?
Yeah, I would speculate that it's significantly less than what would make its way under normal conditions. I think it's the hang up is the transacting in US dollars and the difficulties around that because of the larger, broader sanctions by most of the West. As far as kind of what this means from a supply standpoint, again, I think a lot of people thought diamond prices would kind of surge the way that we saw oil and maybe nat gas and wheat surge. But again, I would note that the industry aggressively restocked in early 2022, kind of following that record 2021. And the industry was fully stocked, maybe overstocked, kind of getting into that February, March period. And I think that's maybe why we haven't seen diamond prices go yet. But again, I think when you look at the structure of the supply chain, there's kind of an inherent delay of maybe 3 to 6 months. So I think, it will be felt more through the supply chain as we kind of go through this year. But again, the big variable is the demand side. And I think if we see, similar demand this year that we saw in 2021, there's going to be, I would say, significant, shortages of goods. But if the macroeconomic situation results in a significant decrease in demand, I think that's going to kind of offset some of that shortage of supply. But I mean, we'll see. Again, I think the most likely outcome is that supply chains will be segregated, and I think the industry has the technology to do that. They have the ability to do that, and I think when you look, like you mentioned, Tiffany and say Signet, that's the largest jeweler in the U.S., and LVMH and Richemont. I mean, the major jewelers in the world, have told their suppliers, we don't want, any goods of Russian origin. I think those companies have a lot of leverage, and I think their suppliers, value that relationship, and I think they kind of have to cater to them if they want to continue that relationship. So that's kind of how I see this playing out, at the moment.
Thanks. There's a question on the chat from Michelle van der Merwe. How would lab-grown diamonds compare to or be affected by high-quality simulants like moissanite, especially as moissanite has become popular in its own right?
Right, and I think that's a really good question, because we have seen, similar examples of this, whether it was, cubic zirconia or moissanite or white sapphire. I mean, this is different because it is chemically diamond, so it has all of the, the great properties that diamond has. So much of this, I think, is going to ultimately come down to how the industry markets it and how the retailers present it to consumers. And again, I think right now, when you look at the way that the jewelers are presenting the product to consumers, that they're selling it as a lower, price, equivalent of a natural diamond, which is ultimately what it is. I think most consumers probably don't, they probably can't distinguish between, a moissanite and a natural diamond, and certainly can't distinguish between a lab diamond and a natural diamond. So again, I think so much of this is going to depend on, how do the retailers market it, and I think it's ultimately in the retailer's hands. And I think when you look at it from a retailer standpoint and how they're going to see this strategically, I think, again, it's a new product that maybe generates some newness and excitement for their store, and there's certainly maybe somewhat of a fad component, attached to it. But I think longer term, if you're a retailer, there's a real risk that if you get to sell a consumer one diamond in their lifetime, do you want to sell a $6,000, $7,000, $8,000 natural diamond, or do you want to sell a $1,000 or $2,000 lab diamond? And I think that's something that they're certainly considering. And again, I think longer term, I think we're going to see companies like Pandora and these fashion jewelers do extremely well selling the product at a much different price point. And I think the product will be marketed much differently than natural diamonds in general. I mean, there's certainly going to be lab diamond companies that have built, really strong brands, and maybe they're producing them with renewable energy and they're vertically integrated in, say, somewhere in the West, and they're kind of leveraging that to sell it as a premium product. So I think those are the products that we'll see compete most with natural diamonds. But I think from a volume standpoint, we're going to see most lab diamonds sold as a much lower priced, fashion jewelry alternative.
Thank you. Kitani has a question. Except for the pandemic, what are other causes that would make diamond prices to decline so rapidly?
So the pandemic at first just hurt, the global economy, obviously. So that was a very unusual situation. I think when we look at diamond jewelry demand, it's quite highly correlated with global GDP, especially I would say US GDP, China GDP. So it's correlated with the strength of the economy. I mean, people buy diamonds because they want them, they don't need them. And when people feel good and consumer sentiment is high and they have discretionary capital, that's when they'll buy diamonds. I would say engagement rings are maybe a little bit different. kind of given the way that works. But I think we want to watch consumer sentiment. We want to watch employment. We want to watch all the traditional macroeconomic factors. And when the consumer is comfortable, diamonds do well. I think diamonds did especially well in 2021 again because they weren't competing with the service industry. And I think in times of emotional distress, diamonds historically have done well. So I think they benefited from that. People were giving meaningful gifts, in late 2020 and early, 2021. I think that helped diamonds. So it was kind of all the stars aligning for diamonds in 2021. And I think going forward, it's going to be difficult to repeat that. But I think the industry also got a lot of new consumers, maybe consumers that didn't consider diamonds in the past, now had a good experience with it. So maybe there'll be kind of a sticky customer if the industry does the right thing.
And just extending from that, Paul, I mean, what's driving the Chinese market? What are people buying there? Are they buying, across the spectrum, or there's sort of certain categories that they're pursuing?
Yeah, so I think at first when we looked at, maybe last decade, it seemed like the Chinese consumer wanted really high quality diamonds. I think as that market matures, they're maybe buying, categories that are more similar to what you see in the US, where maybe they're favoring the size of the diamond over the quality. But it's such a large market, and the consumers have a penchant for luxury there, and they really like diamonds. And I think there's a huge opportunity. And again, that's why I showed that chart of Chow Tai Fook new store openings. I mean, it's really amazing when you look at the pace of new store openings there. And I think that kind of speaks for itself. Right now with the lockdowns in China and, in early mid 2022, obviously that's kind of setting things, back at the moment, but I think that's temporary in nature.
Jean Duplessis got a question here with respect to the size of diamonds, comparing synthetic stones to natural diamonds. Would there be an increase in the size of synthetic stones that people are buying, or is it pretty much the same?
Another really good question. So I think what you're seeing from a production standpoint, 5, 6, 7 years ago was the first time we saw a higher quality lab diamond that was, say, in excess of 1 carat polished. I think it was like 2015, 2016, a company called Genesis produced I think it was like a 1.3 emerald, 1.3 carat emerald diamond. And that was kind of the first, quote unquote, big, lab diamond that was produced. Now, I think you're seeing, many companies have capabilities of producing 3, 4, even 5 carat polished lab diamond goods. So I think to answer the question, it's the technology is advancing rapidly, and more companies are able to produce larger goods. And again, I think one of the benefits of a lab diamond, if you're a consumer, is you could buy a diamond that you wouldn't be able to afford if it was natural. And there's few people that could afford a 4 or 5 carat natural diamond. We're looking at, obviously a six-figure purchase. If we're looking in US dollars, at least, that $100,000 in excess. With the lab diamond, you could buy a 3, 4, 5 carat for, in some cases under $10,000. So it's a completely different product from a pricing standpoint. I think going forward, if consumers want larger goods, I think these producers will find ways to do it. What's interesting is you get to the point where the diamond's so big, consumers don't want that because it looks fake because it's so big. So it's kind of interesting. It seems like right now the sweet spot is at 1.5 carat to 3, 4 carat polished is where consumers are really buying when it comes to the lab diamonds.
Sean Johnson wants to continue on that vein. How do companies grade colored variants of diamonds? Are we able to synthesize lab diamonds similar to the ones such as the Pink Legacy diamond?
Yeah, and this is interesting. The answer is yes. They can produce pinks, blues. I would say, at least based on what I've seen, the hues are different. I think with the colorless diamonds, it's a lot more difficult to differentiate the natural and the lab. But with the colors, the hues are different. It doesn't mean that they won't get to the point where they could produce a lab diamond that has a blue or pink hue that's, you know, a lot more similar to a natural. But I think when we look at from a marketing standpoint, again, you know, kind of talking about, you know, how many consumers can afford a 4 or 5 carat natural diamond? You know, not a whole lot. And I think when we look at the pinks and the blues and the fancies, they're so extraordinarily expensive. Most consumers can't afford a natural pink or blue, but with a lab, you know, diamond, they could. And I think when you look at, you know, the way that some of these lab diamond producers are positioning their product, they're going to focus on the colored stones because they don't have to compete with natural, because the natural equivalents are so rare and so expensive. It's a completely different product. So I think we'll continue to see growth in the color lab diamonds. And again, I think that's a product category that competes very little with the natural industry.
And I think a lot of, as you said early on, goes back to the brand, Paul, and you know, branding and young people wanting something different. Well, you know, that's the niche compared to, say, that, you know, the really expensive top end natural stones.
Right, exactly.
Yeah. Okay, fantastic.
There's one more here from Cameron. Are lab grown or synthetic diamonds graded using the same grading methods as natural diamonds?
Yeah, so I think there's the lab diamond producers definitely want that because they want to, you know, compete with natural diamonds as much as possible. I think they kind of want to ride on the coattails of the decades or century of marketing that's gone into natural diamonds. I think the grading institutions are, you know, providing that if enough people want it. We're seeing, I would say at this point, most of the major grading institutes do grade lab diamonds. You know, I think they're trying to, you know, do everything they can to try to differentiate at least maybe the way that the certificates look. They want, I think the key to this whole thing is you do not want consumers to be confused. You do not want consumers to think that natural are being swapped with lab. I think there's a lot of sensitivity around that. And this kind of fits into what the grading institutions are doing. I think the grading institutions are key here because you know, they're the ones that can, you know, identify with certainty what's lab, what's natural. So they definitely have an important role. And then I think from a marketing standpoint, there are the producers want it, and some consumers want a grading report, and they're providing that. So to answer the question is yes, they are, you know, grading them on a similar scale in some cases. But again, I think they're trying to be very careful to differentiate the way that the two diamonds are being presented, so consumers don't, you know, feel that there's any confusion as to what's natural and what's lab created.
Something that struck me is that if sanctions continue for a long period, and China and India, for instance, get a lot of their diamonds from Russia, won't that in the longer term impact on Western producers?
So I think the impact is going to be that I think there will be demand for you know, new non-Russian production. So the way I look at this is, you know, again, you know, say we say Russian production by volume is 30% of natural global diamond supply. The US is half of global diamond demand. I think if we look at the West plus Japan, that's 75% of, you know, global and consumer diamond jewelry demand. So, you know, we definitely have a situation where the Western demand market is huge, it's significant. And if that market doesn't want Russian goods, we're going to have, you know, a shortage of goods, even if that 30% of Russian goods goes, you know, to China and India. So, so I think there's definitely validity to what you're saying. I think, if anything, this, you know, the circumstances could be a catalyst for, you know, new exploration and development of non-Russian projects in places like Africa and places like Canada, places like Australia. We'll kind of see if that plays out. But I think that's definitely one of the, you know, the possible scenarios that result from this.
Yeah, and I mean, it's an interesting point. If you listen carefully, sort of between the lines to Bruce Cleaver, he's been very circumspect, but also quite bullish. That the message coming out of Botswana is that it kind of suits them. And, this is me paraphrasing. And it'll be very interesting to see what happens with places like Damsha, which I think is still mothballed, whether that comes out of mothballs, because, that still has capacity. And I would think probably, turning up production at a Rapa is definitely doable. So, you probably got yourself a few jobs in Botswana to go and help them ramp up production.
Yeah, well, I had that one slide where I was showing the capital investment, and De Beers is fully committed. They have a lot of skin in the game, and I think Anglo has had a great 2021. So the parent company has the capital. I think they like the diversification that diamonds bring to their, say, base metal and other, commodity portfolio. So I think as long as they remain committed, I think it's definitely a good thing for the larger industry.
Yeah, and I mean the other thing, don't forget the investment De Beers or Debs Marine and Namdeb are putting into the marine production of Namibia. I mean that their new custom built vessel, Benguela Gem, is already. I think it was commissioned ahead of time and pumping diamonds. So I think there's probably, some capacity in Namibia. I think Urban's on the call here or on the talk, and he's going to talk later in the series from Debs Marine. So very interesting to see what he has to say on the situation as well.
Yeah, lower volume. I think it produces maybe a little bit over 1 million carats from a volume standpoint. Yeah. But that Deb Marine operation produces really high quality, large gemstones on an average price per carat basis. They're worth a lot more than most of the other De Beers production, and you kind of have that natural filtration with the alluvial deposits where the lower quality included diamonds don't make it through. So it's kind of always interesting to kind of see that.
Yeah.
Lyndon, you have a question?
Yes, thanks, Tanya. Hi, Paul. Our alluvial production in South Africa is quite special. We produce large, high-quality stones, and large. I mean, often in your monthly production, your high value is often would polish out a plus 10 carat stone, for example. How do you see the market for this type of stone in the mid and longer term?
Yeah, I think it's going to continue to be well supported. Those real large high-end stones are really rare, and I think you look at one of the impacts of the pandemic and the impact that had on the economy, on the global economy, and I think I would say unfortunately one of the big economic takeaways from the last 2 years is even wider wealth separation in the world. So that the wealthy got even wealthier, the poor got poorer. But I mean, as far as how this pertains to the diamond market, that wealthy consumer demographic is more equipped than ever to buy high-end luxury items like really expensive diamonds. And I think you're starting to see that kind of reflected now in the market. The high jewelers are doing really well. They say that consumers are back out buying those really high-end really exceptional diamonds in full force. So I think that segment of the market is going to continue to do well, kind of just given the global economic circumstances. And then I think from a supply standpoint, I think anybody in the industry just can appreciate how rare that those real large goods are. So there's significant supply constraints, and then you have a situation where that real wealthy consumer globally is continuing to grow, and I think that's going to continue to support the demand side.
Yeah. And Lyndon, I mean, you're probably aware that Paul's still waiting for his invite to actually come and see your businesses on the Orange and Vaal River. So you'd better get your symposium going for next year.
Yeah, for sure. Next year he should be here. I'm gonna invite him.
Great. Okay. Yeah, it would be nice to see everybody in person again.
Yeah. Okay.
Unless there are any more questions. We have.
Yeah, I see there's one from Quinton. Quinton, I mean, we can answer that offline. You know, the synthetic diamonds really started out in the industrial diamond production lines. We forget that there's a huge international business of synthetic diamonds used in all sorts of industrial applications. And Element 6, which is effectively a De Beers company, which now produces the Lightbox brand that Paul talked about, is you know, one of the world's biggest producers of synthetic industrial diamonds. So that's a very big industry.
Yeah, just to maybe to provide one comment on that, just for context. So the Chinese are the largest producer of synthetics. They've been for decades now. Most of that synthetic diamonds produced for, say, industrial construction, mining, you know, application. It's that abrasive application. And, you know, the Chinese produce anywhere from 10 to 12 billion carats of synthetic for that industrial application annually. And, you know, natural diamond production, say, like you know, if you look at, you know, my charts from before, say 120 million carats, you know, 40 of that's gem quality, you know, 20% near gem, and 40% of that's industrial. So I think if we're looking at just the supply volume of synthetic versus natural, it kind of really speaks for yourself. And I think you can kind of see where you know, the supply of lab diamond jewelry potentially could get at some point in the future, if we look at, you know, what the supply of industrial grade diamond is right now, and the capacity to produce that is just enormous.
Thank you. And okay, folks, we have José Paulo Donati Filho, who is the Geology and Exploration Manager for Lipari Diamonds. He has over 16 years of diamond exploration industry experience, and he's going to talk to us this morning or this afternoon on an overview of the Brazilian diamond sector. As you've noted, Ken Johnson is stuck somewhere between here and there, and so Paulo has volunteered to give us this presentation. Paulo, we look forward to your presentation, so off you go.
Okay, thanks, Tanya. Thanks, John. It's a pleasure for me to present a little bit about Brazilian diamond and the mine that we are developing here in Brazil. So, okay, let's go. I hope you, and hi everyone that is interested in Brazilian diamonds, and I hope everyone enjoy. Okay. So just talking about the structure of the presentation, just a quick view. I will talk about the Brazilian diamond, the Brazilian diamonds, an overview of Braúna kimberlite mine, geological settings of Brazilian kimberlites, and a brief introduction about the Braúna kimberlite field, which is a little bit more scientific. So let's start with Brazilian diamonds. Okay, so the history of diamonds in Brazil starts on 1714, where was the first time we find a diamond in a gold garimpo. Garimpo is a artisanal digging, manual digging along the Jequitinhonha River and in the state of Minas Gerais. So in 1721, a large scale starts in the Tejuco village, which is now the city of Diamantina in Minas Gerais as well, along the Jequitinhonha River. And in 1739, the Portuguese crown took the control of the diamond fields, exporting our goods from Brazil to Portugal, and had a restricted entrance to the areas, 20% taxes on family productions. Also, the slaves that worked in the garimpos could win their freedom by finding a diamond weighing an octavo, 7.5 carats. So in 1763, the diamond rush forced the capital from Brazil to move to Salvador, to Rio de Janeiro. And this caused the development of new ways to transport the production with the Estrada Real, the Real Road between Diamantina and Rio de Janeiro. So this makes the transportation easy for the exportation, for the Portuguese crown. So Brazil was the main source of diamonds for almost 150 years prior the discovery of the diamonds in South Africa. So Brazil has a long history of production. So here's a diagram illustrating what I highlighted. Brazil was the world's largest diamond producer to 1867. So we had a peak of production as well that coincided with the diamond rushes, with new alluvial and diamond discoveries in Minas Gerais in the end of the 19th century. And also another peak here during 2000, 2006, more or less, with now with companies, the small companies that came to Brazil and developed alluvial diamond mines, small alluvial diamond mines, basically in Minas Gerais, Mato Grosso, and Bahia. And then we had the crisis, the global crisis in 2009, where almost all operations was shut down. And then only back in 2016, with the start of Brauna diamond mine, we have grown the production again, and still. So prior 2016, all of Brazil's historical diamond production has come from alluvial deposits. So we developed the first diamond mine in primary source in the history of Brazil. So it's estimated 20 million carats produced over a period of 300 years. So the potential of Brazil is huge. We have 1,365 kimberlites discovered since 1966. Basically, 90% was De Beers findings. And the majority of the alluvial diamond production is close to the kimberlite fields. That means that the source is close to the alluvials in Brazil. So the exploration that was carried out along 30 years, 40 years, demonstrated that more or less 100 kimberlites are diamond bearing by micro and macro diamond analysis, and small volume processed. In Brazil, 90% of the kimberlites are off Creighton and do not confirm the Clifford rule. However, there are off Creighton kimberlites that are significantly diamond bearing. Example, Canastra kimberlite is a kimberlite that is seated in the southwest of San Francisco Creighton. And possibly some diamondiferous kimberlite are associated with Archean Creightons. And also, Creighton margins are not well defined in some cases. So this information of 19% of kimberlite situated off Creighton can be changed. This is due to the lack of information, scientific information, geophysics, etc. And also weathering, that makes the life a little bit difficult too for mapping and sampling fresh rocks. So historical production, as I said, came from alluvial deposits, and predominantly by garimpeiros, artisanal diggings. So those are some examples of the historical diamonds that were found in Brazil. We have big diamonds, more or less 700 carats. Presidente Vargas. The majority of these big diamonds were found here in Minas Gerais. And if you look at the previous slide, the majority of the kimberlites, 80% of the kimberlites in Brazil, more or less 85%, is located on this area here, between Minas Gerais and Minas Gerais state. So, okay, Brazil has several occurrences of kimberlites with dimensions very similar to Brauna 3, as an example, and a success case of example, Brauna 3. And by experience, our experience has shown that Brazil's potential can be even greater if we take into account some premises, in our view. Kimberlites classified as off-craton may be economically and erroneous classified as off-craton. So we can have more potential on this border kimberlite, border craton kimberlites. Also, the volume for testing matters. Large volume sampling is extremely important to evaluate relatively small kimberlite bodies. This happened with Brauna 3, and now it's we are re-evaluating a marginal pipe that occurs within Brauna 3. The mine is located in the Brauna 3 south lobe. We are re-evaluating the north lobe, which is smaller. And as an example, here, if you see this table here, back in 2007, we did test the north lobe using a mini bulk sample plant, 1 ton per hour DMS. With our test was 9 tons of kimberlite, saprolite, okay, saprolite, and we recovered 5.7 carats per 100 ton. In 2010, 12, and 13, we did another bulk sampling using a bigger plant, which was 10 tons per hour. And we jumped to 1 ton per hour to 10 tons per hour. We did treat almost 2,000 tons of kimberlite, saprolite again, and we recovered more or less the same result, 5.6 carats per 100 ton. So after that, in 2018 and 20, we did use our industrial plant, which is 100 ton per hour. We did process 21 kilotons of fresh kimberlite, and the result was 17.5 carats per 100 ton. So this year, we did another big test. We processed almost 70 kilotons of fresh kimberlite, and we recovered 32 carats per 100 ton. We now are currently averaging 35. So it's a big jump. Same thing happened to Brauna 3 south lobe. At the beginning, we had 18 carats per 100 ton, and then we jumped to another type of processing. We did use a bulk sample plant, and we got 25 CPHT. So the volume matters for small bodies. okay? And also, microdiamond analysis do not necessarily reflect the economics of the kimberlite. This happened with Brauna 3, as an example, where we don't have the same pattern of microdiamond counting as the pattern for South African curves. I mean, the distribution, the size distribution was not, let's say, satisfactory compared with the pattern for South African kimberlites. But we made it. We did insist on the treatment, big volume, and then we proved that the Brauna 3 was economic. So I will talk a little bit about Brauna mine. Just an introduction. So Brauna mine is the first diamond mine in South America, developed in a primary source, in kimberlite. The mine is located in the countryside of Bahia State, in the interior of Bahia State. It's very close to the capital, to the Salvador, the Bahia State capital, Salvador. Brauna was discovered in 1993 by De Beers, basically by mineral indicators. They did run some geophysics, but the first approach with airborne survey and very regional geophysics survey, the results was not so good. So basically, because of in the case of Brauna field, Brauna is not that magnetic. Yeah, it was basically discovered by mineral indicator. So Brauna mine started in July 2016 with a capital cost of $65 million. And as December 2021, the mine has produced 900,000 carats of diamonds, almost 1 million carats of diamond, with a gross sale revenue at $174 million, averaging $188 per carat. This is our current average price for our diamonds. So this is the location of Brauna mine, just to locate you guys. Brauna mine is located in the northeast Brazil, northeast Bahia State, and 350 kilometers far from Salvador, the capital of Bahia. Now, Brauna field is composed by 23 kimberlite, being 3 pipes and 20 dike-like bodies. I will talk a little bit more about Brauna field in the end of this presentation. This is our reserve and resource statement. After process 4.5 million tons of kimberlite, we still have a total proven plus probable reserves of 2.6 million tons, and a total inferred resource of 3.3 million tons. We are working in the North Lobe right now, and also in the extending of the mine life by underground or vertical mine operation design. So Brauna mine produce 12 kilotons a day, being 2.5 kilotons of kimberlite. we have currently for our mining fleet 3 excavators, 3 loaders, 10 ore trucks for 8x4 trucks, 3 bulldozers, 2 motor graders, and 4 service trucks. The open pit is currently at 250 meters at the south lobe, which is our ultimate pit design. So we are jumping to the extending of the mine life. And also our plant, not talking about the plant, we process 2.5 kilotons a day of fresh kimberlite, 24/7. We also have a XRT circuit to recover the large diamonds. And we work with 150 tons per hour DMS circuit as well. We also have designed a centrifuge to recover the water from the circuit. Now we recovered 95% of the water. The region there is a very dry region, so the water, the problem was solved with the centrifuge. And also we excluded the tailings pond. And so this is another good side of using centrifuge in the process. We have in-house plant maintenance for plant and also the fleet, mine fleet. Our production forecast with this extension, the mine life is about 130,000 carats per year. Yeah. These are some examples of our diamonds. In terms of size, in general, our productions, our main size stays in between 0.5 to 2.5 carats. But we also have a population of special diamonds plus 10.8 carats, more or less 4%. And in between this size classification, we have very good high quality diamonds. Those at the right are examples of 2 very good diamonds that we recovered, 51 carats and 95 carats. So this is the vertical pit design that SRK Consulting Canada is working for us. We are planning to start the extension of the mine life for the south lobe in the third quarter of 2023. This technique was applied in Koido and also in the Merlin kimberlite in Australia. And we are currently completing the engineering design for this, the engineering design and study for this vertical mine. We are evaluating 2 types of mine extension, the vertical mine and in a sub-level retreat underground mine, where we will be able to also mine the north lobe. So SRK is also studying the possibility to make this feasible for us. And the V mine and the underground mine development has been showing like positive economic results for us. We need to decide now which design to follow. Also, we are working the extension of the exploration in our permits. We have 23 kimberlite occurrence, and we already evaluated the Brauna 7 pipe and Brauna 821 dike. And we have a pit design already, and we are expect to commence a test, a trial mine test for Brauna 7 at the end of 2022, end of this year, to include this reserve into our mine life. And it's very close. Brauna 7 is only 1 kilometer far from the plant, and Brauna 821 is more or less 4.5 kilometers far from the plant as well. And this is the idea, to finish this evaluation and include the kimberlite mass into the plant. So a little bit more about the geological setting of Brazil kimberlite, some scientific informations and numbers. Brazil has 1,364 kimberlites. As I said, majority are located in Minas Gerais state. I don't know if you guys can see my arrow here, but here's the Minas Gerais state. And it's located in off-craton conditions. Brauna fields here in the northeast Brazil, northeast of São Francisco Craton. In terms of area, in terms of ages, the majority of Brazilian kimberlites are Mesozoic, as everywhere in the world. The oldest kimberlite is 1.1 billion years, is the Salvador one, and the youngest is 69.7 million years, Santa Fe one, a small dike. And Brauna kimberlite is 642 million years. So this is one of the oldest Brazilian kimberlites. And in terms of area, the Brazilian kimberlites are very aged, 6.6 hectares. In the largest one, 187 hectares, Monte Carmelo kimberlite. And the smallest kimberlite is 0.01 hectares. So they are very, very small dikes. And Brauna 3 kimberlite is 2 hectares. Here's a exercise that I did a long time ago, comparing the public domain information of mapped kimberlites, just to show in terms of comparison, the size of the kimberlites in the world, at least the published ones. So in yellow, we have the Brazilian kimberlites. Brauna is here in the top, Brauna 3, 2 hectares. And the other mapped kimberlites are more or less equal in size, except the Regis and Monte Carmelo kimberlite. You can see the difference between the kimberlites and the other kimberlites in the world compared with the Fort Lacorne kimberlite, the Orion and the Star kimberlites. They are really, really huge. This is just a curiosity. So we'll talk about the Brauna field, a little bit more scientific information. The Brauna field intrudes new Proterozoic, Paleoproterozoic greenstone belt in the northeast Brazil. So here's the geological configuration of the São Francisco Craton. These numbers here, 1, 2, and 3, they are Archean blocks. Brauna is located in Serrinha block here, the number 3. This is the greenstone belt of Rio Itapicuru. Is a Paleoproterozoic, 2.2 billion years, Paleoproterozoic greenstone belt. And here's the Brauna kimberlite field. So Brauna field is a northwest, more or less N30W strike field. It's mainly composed by dikes that filled the fissures, the old fissures, reactivated during the Neoproterozoic. And the disposal is more or less 17 kilometers from this Brauna 13 to Brauna 10. And the interesting thing here is the Brauna field is restricted to this batholite here. It's a Paleoproterozoic batholite, trondhjemite. And we don't find any kimberlite, at least we did so far, we did not find any other kimberlite in the outside of this batholite, in the greenstone, for example. So the field is restricted to the batholite, which is a huge batholite. In terms of wall rock geochemistry, the Brauna don't fit in the classical classification, South African classification of kimberlites and orangeites and transitional kimberlites. It's in between, considering the ratios, the trace element ratios, important elements, thorium, niobium, lanthanum, for example. Those are the diagrams from Smith, 1983. Also, the stable isotopes don't fit in the classical classification. You see the strong negative epsilon neodymium for Brauna 3, the black squares here, and low strontium ratio as well. So it's in between the transition kimberlites and olivine lamproites. So it's a anomalous chemical composition for Brauna. That doesn't fit. Brauna doesn't fit in the classical classification, but it's a kimberlite. In terms of lanthanum-niobium ratio, the Brauna shows a heterogeneous source of melt generation between the lithospheric mantle and the asthenospheric mantle. This happens as well. The composition is very close to the phlogopite-bearing peridotite xenolites from North China craton. It's very interesting, and we see this pattern for the transitional kimberlites from South Africa and some of Minas Gerais and Goiás kimberlites from Brazil. It's very, this shows that the mantle was very metasomatized prior the melting, etc. Brauna has 642 million years, Neoproterozoic. I did date using uranium lead in perovskite. I used TIMS, multi-grains, because of the uranium thorium ratio was so low that I cannot use like single grain, only multi-grains. And this put Brauna as one of the oldest Neoproterozoic kimberlites in the world. We have some Neoproterozoic with like older ages in Venezuela as well, Guaniamo 712, and Australia 800 million years, and some in the main craton in Africa, this Weyesua, I don't know how to spell, but Weyesua kimberlite, between 8 to 100 million years. So that time in the Cryogenian was some researchers call the Earth like the theory of the snowball Earth that occurs between 720 to 630 million years where the ice of the poles was almost touching the equator line. So after that, the active margins start to play again in 640, more or less, causing again the breakup of Rodinia that starts in 1.2, more or less, 1.1, 1.2 billion years. This breakup of the supercontinent of Rodinia caused the intrusion of kimberlites. Here I did plot some more or less the location of the kimberlites, and this close here is the West Africa Weasua kimberlite, Guaniamo, and Brauna kimberlites in the San Francisco Congo Craton. Oops, sorry. So this reflects the breakup of Rodinia. Also, I did take some zircons out of the kimberlite and date the zircons, and this proves this. All these ages prove that for some reason the Brauna kimberlites did not cross the Archean basement, or the Archean basement was not available below the supracrustal rocks of the Rio Itapicuru greenstone belt. Now this is a cross section of the greenstone, where I did include the kimberlite. Kimberlite rise, the kimberlite progenitor magma was previous metasomatized and mixed with the lithosphere material, and then rised up, collected the diamonds. We have also eclogitic paragenesis with G3 garnets, G9 garnets, and also some yellow diamonds that indicates this shallow level incorporation of minerals and mantle rocks. With this rise, we had the xenolithic incorporation, basically related to the greenstone belt, the Itapicuru greenstone belt, only Paleoproterozoic ages, and finally the eruption of the magma restricted to the batholite, the nordestina batholite. In terms of facies classification, in summary, we have two main facies. A coherent one, very magmatic looking kimberlite. It's a massive kimberlite, very competent, phlogopite rich, with some of preserved olivine cores, but in general they are totally replaced by serpentine or calcite, pseudomorphs in general. Altered clinopyroxene in the matrix as well. It's very rich, a perovskite rich kimberlite with sometimes coarse perovskite with ninja star shape like this one here. We also have, of course, the garnets now with caliphytic border, late stage calcite veins, and the olivine abundance varies from 30 to 50%. The garnets are in general rounded as usual for kimberlites, including the G10 garnets. And the other facies is the volcanoclastic one. It's massive as well, but sometimes shows like a very, very altered and heterogeneous ground mass. Also late stage calcite and serpentine veins. This rounded feature here is the magma class. We see some pseudo magma class, and sometimes very rare, but occurs melt bearing pyroclast. The olivine abundance is a little bit lower because of the alteration and the metasomatism. It's about 30 to 35%. And perovskite is in general coarse. And also sometimes euhydral. And the two facies, the main two facies have also the crustal xenolith variation, being the coherent ones like less diluted or has less xenolith, crustal xenolith, and the volcanoclastic ones has more is more xenolith rich. Here is some examples. The CK, like with an absence of xenolith, and the CK with some xenolith, and VK with high presence of xenolith. So this is how the kimberlite looks like in the core boxes. But of course, we have much more variation. At the beginning, I did describe like 12 variation of facies variations, but we need to make the descriptions simple, because otherwise there is no way to model, to produce a geological model of such a like many facies. It's hard to model with like 12 facies in a small body, small kimberlite body. So this is how the kimberlite looks like. Like after all the drilling programs that we have along the mine life, we did produce this. We came up with this most updated geological model. We did drill 25 kilometers of diamond drill course. The deep drill holes reached the kimberlite up to 506 meters below surface. And here we can see the three lobes, more or less, two lobes, and south lobe, north lobe, and a connecting lobe here, or a transition zone that we called central, Brauna 3 central, Brauna 3 south, central, and north lobes. So this lobe we are re-evaluating now, the north lobe. And here is the physiological variation of the kimberlite illustrated in the 3D model, where we have this the VKs in blue, CKs in yellow, and the breccia facies in green, up to 15% of dilution, internal dilution. Dilution, I mean crustal xenolith content. And a connecting dike as well between the south and north lobe, small dike. And here's a picture of the how the dilution plays in the kimberlite. This is the south lobe. South lobe has less dilution and small fragments, and north lobe we have some big blocks and some in situ blocks. Also the evolution of buff was a little bit different. They are the same process, the same pulse, magmatic pulse, but in the north lobe, the magma encountered a more competent crust to break up than the south lobe, which was let's say the main conduct of the magma, and have more, let's say, freedom to rise up to surface. Final thoughts. Just a compilation of the information I present to you guys. So talking about the exploration, the Brazilian diamonds, and the continued investment in exploration in Brazil using the latest technology in sampling processing methods will certainly lead to a new diamond discoveries in Brazil. Brazil has a lot of potential, but we need companies with know-how and money to invest in Brazil. And also the country has an excellent potential for development of both primary and secondary diamond deposits. And of course, the potential can be realized by taking serious exploration with right and properly methods and plants using DNS and the right technology for diamond evaluation. Also the Brauna, Brauna is the first diamond mine in South America, developed in a kimberlite deposit and marked the beginning of Brazil growing diamond potential again, and showed that Brazil has a potential that was, like, let's say, forgotten in the past. So we still have 135 kimberlites to explore in Brazil, and the majority are proximal to the alluvial diamond production. So this is equal an excellent potential to develop other mines. And the exploration and scientific study of the Brauna 3 kimberlite has led better understanding of the mantle under the South American Shield. Brauna 3 is one of the rarest neopaterozoic diamond source that is being explored and mined in the world. Brauna kimberlite does not fit into the classic subdivision of the kimberlites and orangites, and was derived from the mantle source that was strongly metasomatized back in the neopaterozoic, and were formed in the enriched subcratonic mantle lithosphere. And just to finish here, the thoughts, this different chemical composition and the tests and the micro diamonds and everything that we use to follow, we try to use to follow the patterns from examples in the world. Basically, mainly examples are from South Africa, but sometimes we need to think a little bit outside of this information to make the deposit feasible. This happened with Brauna, and can happen with other kimberlites in Brazil and in the world. Why not? So sometimes we need to forget a little bit the patterns and try to investigate kimberlite. Each kimberlite has a unique rock. Of course, the patterns help us a lot. We learned a lot with the patterns, but yeah, sometimes we need to try to consider each kimberlite as a unique deposit or target for future exploration and development. So that's it. Thanks, everyone. For more information, we have the LIPRI's website, and you guys can access, and my two main publications if you want to investigate a little bit more about the scientific side of Brauna kimberlites. And that's it. Thank you. Obrigado.
Thanks, Paulo. Fantastic.
Thank you very much, Paulo, for taking the time to do this at very short notice. We do really appreciate it. Folks, are there any questions? Please just raise your hand or put it in the chat box. We still have a couple of minutes.
Yeah, just a quick one to get the process going, Tanya. Paulo, is anyone else exploring in Brazil at this point in time? I mean, you guys have done a great job developing the first mine. And is anyone else showing interest or other exploration going on in Brazil at this point in time?
No, John. Only us.
Okay. Good. And fascinating that you're looking at developing this vertical crater mining method. That's going to be fascinating, and potentially open up, you know, other small kimberlites to be mined
Yes.
like that. Yeah.
Exactly. This open a possibility to mine kimberlites that was not be considered in the past as a potential because of the strip ratio.
Yeah.
And also dikes, which is complicated to mine.
Yeah.
Small dikes and small blows.
Yeah. Interesting. Brooke, you have your hand up, please.
Yes.
Hi, bro.
Yeah,
Hello.
Paulo, thank you for a great talk. And, you know, there's so many alluvial diamonds that have been recovered in Brazil. And I think there's always been kind of two theories. One, the result of millions of years of concentration of extremely low-grade kimberlites, like so many have been found in Brazil, or a yet to be found major source or district. What's your preference of those two theories?
For example, in Bahia, in the Chapada Diamantina, Bahia, the source gone. The kimberlite, the diamonds are related to Paleoproterozoic conglomerates. So there is an example, maybe it's an example, we don't know, of let's say a low-grade kimberlite that was being concentrated in these conglomerates. Okay, but for example, in Minas Gerais, we have the source of the diamonds very close to the kimberlites. The source of the diamonds very close to the kimberlites. Very close indeed. Sometimes it's on the top. The creeks are in the top of the kimberlites. So yeah, well, we need evaluation. But I think for these alluvials that are proximal to Mesozoic kimberlites, we have a very good potential.
For new Mesozoic kimberlites, it could be higher grade than the ones that have been found in the past.
Yes, and also was because the biggest diamond in Brazil, the biggest diamond in Brazil, in the majority of the production came from these areas. Yeah.
Thank you.
You're welcome.
Any other questions, particularly from the students? This is your opportunity to speak with somebody who's been working in the field there.
And Paula, maybe just while we're waiting for more questions, comment. I mean, one of your big challenges in Brazil, obviously, is the weathering profile. And you talked about saprolite. I mean, you know, in my experience, and I had some great experiences in Brazil with De Beers geologists, I mean, the weathering profile is very challenging.
Yes. Yeah, the problem is the contamination of the soil. How to understand the transition between the soil and the saprolite and saprolite to a fresh rock. It's a challenge because the weathering here is so huge and so strong that sometimes we, in Brazil, for example, in Brauna, at Brauna, the saprolitic soil, the saprolite from the granodiorite and the kimberlite, when very altered, we cannot separate, we cannot identify. It's the same, that has the same color. Of course, in the lab we can identify, but in the field is very complicated, very complicated. Separate both saprolites, the granodiorite and the top saprolite, granodiorite and kimberlite. So this is complicated, and also that test we did with the North Lobe showed that it's much better to test the fresh rock, of course, and we don't have any losses, and we can see what we are doing. We can calculate, we can quantify the internal dilution, what's happening, the contacts. It's another word. But of course, the easiest way is to excavate the surface, the saprolite. And it's also the first approach and the first step try to understand the saprolite first, and it's cheaper as well.
Mhm.
But sometimes we can, like the drill and kill, we can book sampling and kill the project as well. It's, this is the problem. Sometimes we drill and kill, and sometimes we process like surface material and kill as well the project.
We've got two questions on the chat, Paulo. The first one is there possibly another diamond rush in Brazil on the cards?
Where is the question?
It's in the chat box by Kelly. Are we possibly looking at another diamond rush in Brazil?
Yeah. This will depend on the demand. Also, technology and people interested in looking for diamond in Brazil. I think the future will be evaluate the kimberlites more than alluvials, because kimberlite lead more mine life than alluvials, in my view. Depend. I think the hotspot will be in Minas Gerais. There are 1,000 kimberlites there, diamonds, lots of garimpeiros still there, working, recovering diamonds. As soon as we start a mine there, I think people will look differently to Brazil, as we are already looking after we start the mine in Bahia. Yeah, maybe.
Yeah, it needs bucks and dollars and committed people like yourselves. And then maybe just comment. There's a question about the vertical crater mining. I mean, I guess, and it's a valid question. I mean, it's a fairly recent approach. It's used in some places. I mean, with your saprolite degree of weathering, I mean, presumably you have the benefit there of you're already down in the very fresh solid rock. So your sidewalls are going to stand up from a safety point of view.
The vertical mine will start at the bottom of the pit. We are currently at 260 meters below surface. So the plan is to go down more 100 meters and maybe extend to 150 meters. The structural control, now we are advancing in a geotechnical drilling program and also hydrogeology studies, because for sure the water will be a point to consider. The safety side of the stabilization of the vertical pit is a challenge, because the other vertical mines for example, in Coido was starting from the surface, and now we are planning to start from the bottom of the pit. So it's a little bit different condition. So we need to have a very good structural control and also hydrogeology control. Yes, we need to have a intense drainage systems, because we are going to go down by hoists. We are going to position a hoist in the bottom or in the border and go down by a hoisting process, lifting. We need to have a very good control, a safety hoist to keep people safe from any like flooding process, or we don't know. We are studying this engineering points as well. But yeah, for sure the water will be a problem for us and needs to be considered. And SRK is already working in the engineering plan for that, the hydro plan.
Sean,
But everything is possible.
Yeah.
Yes, indeed.
Yeah.
John has one question, one last question before we need to move on. The process, what were the processes that you followed to conduct exploration within the forest environments? I think that's your question, Sean.
The forest environments. In here,
Back
Brazil, we
at
have
the Amazon.
like in Amazon. Yeah, if we are in a permanent protection reserve, for example, we cannot explore. Yeah.
Okay.
The government don't give us the exploration permit, but where we can apply for, it's okay. We need to follow all the steps for environmental license and work and make this happen.
And are you still using mostly indicator minerals, or do you back that up with geophysics as well?
Oh, okay. So in general, mineral indicators. Because of the size of the kimberlites, in 6.6 hectares is the average, but we have in the case of Brauna, Brauna is a small pipe and low. If we have a problem with if the kimberlite is low magnetic, doesn't appear in the depend on the contrast of the host rock. Okay, but in Brazil, we have some of these kimberlites are low magnetic. So the response is so low that we cannot identify by drone or airborne surveys. And then we need to jump to the ground mag, which is a little bit expensive. So in general, we start with mineral indicators. And also when we have, like in the forest, when we have a thick soil cover, this makes the life a little bit difficult to use geophysics, because of the penetration of the airborne, for example, and drone. But the mineral indicator is still one of the best tools.
Paolo, thank you ever so much for your time and your expertise here this morning, this afternoon. Brooke, for those of you who don't know, and most of us do, is currently president and CEO of Kraton Minerals, is a private diamond exploration company, and he's also president of the consulting firm JBC Ventures. And Brooke has pretty much been around, been there, done that. So we look forward to your discussion on the Canadian diamond history.
Okay, thank you, Tanya and John, for the invitation to speak. You put together quite a session. And today I'm going to summarize the Canadian diamond business, emphasizing exploration, my area of expertise, and the history. I expect that a lot of you in South Africa, especially some of the younger people, may not be extremely familiar with the story. It's a great story. The Canadian diamond business really came out of nowhere 30 or so years ago, and it's a great example of what good exploration, strong support from investors, communities, and regulators can achieve. Okay, so before I start, just some acknowledgements. I've been in diamond exploration most of my career, and I'd like to acknowledge 4 of my employers: Exmin Corporation, Ashton Mining of Canada, Peregrine Diamonds, and Kraton Minerals. I also want to acknowledge my family, who's given me great support, my wife Juanita, my son Jeffrey, and my parents. And also in this business, I really feel like I've had the pleasure to meet a lot of interesting and inspiring people, and some of them actually quite eccentric. And that's been a real pleasure. And some of those people are actually involved with this short course. So here's an outline of the presentation. First, I'm gonna summarize North American diamond exploration and diamond districts, just emphasize how important teamwork is in creating something like the Canadian diamond business or any great discovery. I'm gonna provide case studies of 4 Canadian exploration programs, and I'm gonna summarize the current status of the Canadian diamond business and speculate on its future. This map shows the interpreted basement geology in North America. The pink, interpreted Archean basement, and the green, early Proterozoic terrains that were accreted onto the Archean cratons. A lot of the Precambrian geology is covered by younger sediments. If you look at this map, it shows the status of known kimberlites in North America in 1990 as blue diamonds. You can see in 1990, there were a lot more known kimberlites in the United States than in Canada. And arguably before 1990, there was more exploration in the United States than in Canada. I estimate maybe over 200 million US was spent on diamond exploration in the USA between 1975 and 2010. And there were modest attempts at diamond mining in Colorado at Kelsey Lake and in Arkansas at Prairie Creek. I spent the first 15 years of my career exploring for diamonds in the United States before moving to Canada in 1998. Just a little bit of geography. I'm going to be talking about the Northwest Territories, the territory of Nunavut in the provinces of Alberta, Saskatchewan, Ontario, and Quebec. And this red line represents the Arctic Circle. Technically, everything north of that line is, quote, the Arctic, but most people in Canada consider a zone 100, 200 kilometers south of that line or more the Arctic as well. So diamonds were discovered on the Slave Craton in 1999, and that ignited a diamond exploration rush, the likes of which the world had never seen before and will probably never see again. And a lot of the activity that was ongoing in the United States kind of shifted to Canada. On this map, red diamonds represent all the kimberlites discovered in North America after 1990. Between 1991 and 2021, I estimate over 900 kimberlites were discovered in Canada in about 25 new districts. Over 3.9 billion Canadian was spent on exploration, and it was really remarkable success. One thing to note is that since 1990, there's no documented kimberlite discoveries in the United States since 1990. The result of all that exploration, 7 Canadian diamond mines, 5 on the Slave Craton, Jericho, Akati, Diavik, Snap Lake, and Gaucho Quay, and 2 on the Superior Craton, Victor and Renard. 4 of those mines are still operating, and I'm going to summarize those towards the end of the talk. One of the things that's really important to realize that a lot of things have to come together to make a great discovery and also just create this new business that was created in Canada so suddenly. It really requires a lot of teamwork. Of course, great technical work and prognostication by the geologists that decide where to explore, how to explore, all the logistics associated with that. But equally, or even maybe more important, is support from investors. The Canadian diamond business was really the support from investors for junior diamond explorers was really unprecedented, billions of dollars. And without that and support from communities and regulators, it really never would have happened. Another really important thing in the Canadian diamond business, and I think in discoveries everywhere, is the importance of partnerships and joint ventures. You know, people sharing the risk for their work. 6 of the 7 Canadian diamond mines were the result of partnerships at either the discovery and or development stages. This just shows the statistics on the exploration spending in Canada since 1988, a few years before the great discovery. Over 3.9 billion Canadian, that's 3 billion US. You can see on this graph here below that shows, expenditures on the y-axis, time on the x-axis. At the peak was in 2006, over 300 million spent on exploration. The decade from 2001 to 2010 was really a peak, over 2 billion spent. Really quite a lot of spending. Common thread through all these discoveries is indicator mineral sampling. As far as I know, all but 3 districts were discovered as a result of indicator mineral sampling. The indicator mineral sampling got you into an area, and it allowed you to fly a pretty focused airborne survey, airborne geophysical survey, which led to the discoveries. 3 districts, 2 in Alberta and 1 in Saskatchewan, were discovered directly by geophysics. And you can see sampling methods really haven't changed that much. On the left, there's a lithograph from 1556 showing people wet screening samples, and the field part of indicator mineral sampling probably hasn't changed much in hundreds of years. The exploration in Canada was really remote, or for the most part has been really remote and really costly. Virtually all the support is by aircraft, and if you're lucky, an ice road going somewhere near your project, and big planes to transport bulk samples, remote, expensive exploration camps. And just as an example, this core rig in Nunavut in 2010, to move that rig from site to site, it has to be dismantled into 18 parts. Each part is then slung by a helicopter to the next site, and people are on the ground putting the rig together. So you can see quite an expensive challenge, and really attention to safety is really important in that process. So now I'm going to give you very brief overview, just to give you an idea of how the exploration went in Canada. Brief case studies of 4 discoveries. The Lac de Gras, Acadie discovery, which really started it all, and 3 discoveries that I was involved with: the Buffalo Head Hills in Alberta, Renard in Quebec, and Chidliak in Nunavut. First, Lac de Gras. The trail to Lac de Gras started 10 years before the first kimberlite discovery. In 1981, geologists Chuck Fipke and Stu Blusson found high interest abraded indicator minerals in the Western Northwest Territories, and they began their quest to find the source of those minerals. At the beginning of their work, they were supported by Superior Oil in the USA, which the exploration was managed by Hugo Dummett, a famous South African, and by Falconbridge, who had done a lot of diamond exploration in Botswana. Between 1981 and 1989, Fipke and Blusson followed the trail 650 kilometers east to the Lac de Gras region. The first claims were staked in 1989. In 1990, a JV was formed between BHP, Diamet, Fipke, and Blusson. And in 1991, the first kimberlite and diamonds were announced, and that ignited Canadian diamond fever. And I'm just going to tell you a little bit more about that in a minute. And by 1998, the first mine opened, and it was supported by the Dene, Tlicho, Métis, and Inuit communities. Very important part of the process. The 3 people that were really key to making this first discovery and really kicking off the Canadian diamond business were the geologist Chuck Fipke and Stu Blusson, and Hugo Dummett, a South African geologist / mining executive. Mr. Dummett was involved at the very beginning, supported the first couple of years of work, so he was familiar with the story when in 1990, Blusson and Fipke knocked on his door, and he immediately recognized the potential and sold it to management at BHP. Dummett was probably about the only person at BHP at the time that had diamond experience. There's very little published on the technical work that led to the initial Lac de Gras discovery. The best reference is a book, Barren Lands, by Kevin Krajcik. And there is a lot of technical information on the region available now through government data sets, company disclosure, and lots of papers and dissertations. Now I'm going to talk a little bit about the diamond fever. The first article describing the Lac de Gras discovery was on a 3-paragraph article on page 13 of the Northern Miner on November 11th, 1991. They talked about a 59-kilogram sample yielding 81 small diamonds. There were a couple more articles in 1991, but it really didn't get a lot of attention. People were still trying to figure out what it all meant and everything. But in the background, claim stakers were busy staking claims in the Arctic night, and junior companies, stakers, prospectors were all busy wheeling and dealing claim blocks and thinking about future exploration programs. The first claim block by the BHP Diamet Blussen 50 joint venture was 405,000 hectares in size. By the end of 1992, 5 times that amount of ground had been staked, centered on the initial discovery claim block. 1993 and 1994, the staking continued, mostly moving north. By 1995, almost the whole Slave Craton had been staked, and there were exploration camps everywhere. By 1998, people started dropping ground. Hundreds of kimberlites had been discovered, and the 4 districts that would ultimately host the 5 diamond mines were discovered. Jericho and Nunavut, and Akati and Diavik in the Lac de Gras district, and Snap Lake and Gaucho Quay. So really remarkable success, exploration success over a short period of time under difficult conditions. Snow on the ground 6 months a year. At that time, as some of us know, there was very little published on diamond exploration, kimberlites, and diamond exploration techniques. In August 1992, Robert Bishop, gold stock analyst, published this guide for investors, Diamonds in North America, Point Lake and beyond. It was really a remarkable piece of work considering Mr. Bishop was a gold stock analyst and had a liberal arts degree, and because of the lack of publicly available information at that time. By mid-1992, barely 6 months after the first discovery, there were 35 publicly traded exploration companies with exposure to the NWT diamond play. As I mentioned, there was very little published about diamond exploration at that time, but there were so many companies mounting exploration programs, so many geologists that wanted to learn about diamond exploration. Very few people in Canada at that time knew anything. And a real seminal event in the diamond play was a 1993 short course run by the Prospectors and Development Association of Canada and Pat Sheehan, who Tanya gave a tribute to earlier. It was really a remarkable session. Again, you got to remember at this time, there was almost nothing published on diamond exploration techniques. And you can see both the speakers and the topics in this session. You had people like Herb Helmstedt, who's giving a talk later on tectonics, Howard Cooper Smith, John Gurney and Rory Moore, Bram Janse, Nick Sobolov, really a who's who of diamond exploration. And, it was really a crazy environment, almost a Wild West environment. The session was oversubscribed, standing room only. All the speakers went over time. There were lots of questions, some of them that were just out of left field. And session went on late into the night, and then they wheeled in a few kegs of beer, and everybody stood around the kegs of beer and tried to figure out what it all meant. As exploration in the slave craton matured, geologists were prognosticating about where the next discovery might be made because Canada had lots of Archean terrain that was relatively unexplored at the time. So in Alberta, there were two big staking rushes, 1992 and 1997, after Ashton discovered kimberlites in the Buffalo Head Hills. Ashton announced their discovery in January 97, and by the summer, half of the province of Alberta was staked. Quebec, massive staking rush after the discovery of Renard in 2001. In the late 90s, exploration activity kind of moved east to the eastern Arctic, and there were massive helicopter-supported reconnaissance programs, and they resulted in a lot of discoveries, including Chidliak, which is one of the case studies I'll present to you in a minute. Buffalo Head Hills in Alberta. That's one of the districts that was discovered without the collection of a single indicator mineral sample. In 1995, an oil company geologist was looking at some proprietary oil company magnetics that they had used to interpret oil structures. And he saw a few high frequency near surface magnetic anomalies, and he became convinced that these were kimberlites. He then looked at the company's seismic data and saw that several of these magnetic anomalies corresponded directly with seismic disruptions. So his company, the oil company, staked the claims. Then in 1996, they went looking for a partner with diamond expertise, and a joint venture was formed between Ashton, Alberta Energy, and Pure Gold. In 1997, Ashton flew the first airborne magnetics, made the first discovery, plus about 15 others. Also discovered diamonds, and by 2003, 38 kimberlites were discovered. And very important aspect of the programs was great support from the Red Earth, Lubicon, and Loon River Cree nations. Now I'm just going to zoom into this little area of the Buffalo Head Hills kimberlite province on this map. The province is more or less circled by this red circle, and it's located about 400 kilometers north. You can see on the left, that was the published magnetics available at the time, 2.5 kilometer line spacing. And I put the locations of 4 kimberlites on the map, and you can see they don't show up at all. But look at the high resolution magnetics that was flown by Ashton, and the kimberlites stick out like sore thumbs. Quite a dramatic contrast. In this area, you have hundreds of meters of shale overlying the Precambrian basement. So there's a fantastic contrast to see the kimberlites. It turned out a few of the kimberlites were actually outcrops, but they were hidden in the bush and probably had never been seen by a geologist before. 5 of the kimberlites showed economic potential. This table summarizes some of the mini bulk and bulk sampling that was conducted. The largest sample was collected from the K14 kimberlite, 479 tons by reverse circulation drilling, and it yielded a grade of 11.7 carats per 100 tons. The best grade came from K252, where a 22.8 ton sample yielded a grade of 55 carats per 100 tons. But the problem with K252, 1 hectare and under 70 meters of till. If that kimberlite would have been at the surface like some of the other larger kimberlites, it would have and been larger. It certainly would have required detailed evaluation. Here you have a 0.76 carat yellow diamond that was found in K6. And on the right, an image showing a seismic disruption caused by the K7 kimberlite. Pretty dramatic. Now, Renard. In 1996, Ashton and SOQUEM formed a 50-50 joint venture to explore a large region in northern Quebec. SOQUEM was a Quebec Crown exploration company. The joint venture covered an area of about 450,000 square kilometers. And The joint venture collected about 1,500 samples over an area of about 450,000 square kilometers. And that's a density of 1 sample per 300 square kilometers. Most of the samples were collected from a well-developed esker system in the area. And eskers are sinuous mounds of sand and gravel that were deposited by rivers that flowed underneath glacial ice. So the 2-year orientation survey yielded about 20 indicator mineral anomalies. And in 1999 and 2000, follow-up programs were conducted related to each of those indicator mineral anomalies. In one area screened kimberlite and diamonds, and that was the Foxtrot area. Believe it or not, first sample that led to the discovery of Renard was a sample that only had a couple ilmenite, and it was 20 kilometers away from the mine. In 2000, first claim block, 45,000 hectares, was acquired. And an airborne geophysical survey was conducted. The first kimberlite and diamonds were discovered in 2001. Between 2002 and 2012, exploration, bulk sampling, and resource definition. And in 2016, the Renard mine opened. The project received great support from the Mistissini Cree Nation. This is a picture of a typical esker, sinuous mound of sand and gravel. And this is typical esker material. This map shows the magnetic signatures of the kimberlites in the core area of the Renard project, and some of the first mini bulk sampling that was done to determine that there was economic potential. The best grade at the early stages came from Renard 3, a small kimberlite that had a grade of 134 carats per 100 tons. The largest kimberlite was Renard 65, 1.5 hectares, and it had a grade of 54 carats per 100 tons. These kimberlites are about the same age as the Brazil kimberlites that Paulo talked about 600 million years old. By 2004, there were 9 kimberlites and 55 tons tested from 5 bodies. A real interesting event in the project was in 2003, a 4-carat diamond was preserved in HQ drill core. As far as I know, that's one of, if not the largest, diamond ever preserved in a sample of exploration drill core of kimberlite. Finally, I'll summarize Chidliak in Nunavut. This is an illustration really of how important partnerships were in the Canadian diamond rush. Okay, in 2005, an alliance was formed between BHP and Peregrine. It was kind of a traditional back-end deal that BHP was so famous for at the time. It was the first stage of work would be jointly funded by the two parties, and then BHP would step back and let the junior company run with it at their own cost. And if they found anything, BHP could earn up to 51%, or they could earn 51% in the project by funding a multiple of the exploration expenditures incurred by the junior company. So in 2005, there was an orientation survey over a large area of South Baffin Island, basically a grid of till samples collected at 15 kilometer centers. 2006, 2007, land acquisition and follow-up sampling. 2008, the first airborne geophysics and first kimberlite and diamond discovery. And then between 2008 and 2013, 74 kimberlite discoveries and a lot of testing and evaluation, microdiamond work and all that stuff. And between 2008 and 2011, just to emphasize the importance of alliances, BHP spent 34 million Canadian first to earn their 50% interest under the back-end deal, and then after they earned in their share of exploration expenditures. In 2016, resources were defined in 2 pipes, And in 2018, the project and the company, Peregrine, was purchased by De Beers. And like the other projects in Canada, great support from the indigenous people, the Inuit in Pengnurtung and Iqaluit. This map just shows the original sampling done on a 15-kilometer grid of till samples. In the Chidliak area, 5 samples contained indicator minerals, 1 with 21 indicator minerals. This work was jointly funded by BHP and Peregrine. Peregrine then felt that this warranted further work. Peregrine took the data and ran with it in 2006, 2007, did a lot more sampling. As an example, in 2007, Peregrine collected 870 samples, with about a third of those having indicator minerals. And the indicator minerals were clustered in 3 distinct areas. And that prompted Peregrine to acquire the exploration permits, which are outlined in blue on this map. One of the things that really clued us in at an early stage that we were onto something and that there was a source nearby was the surface features of the indicator minerals. They were remarkably fresh, as you can see in this photograph. Compare those minerals to some minerals from another Peregrine project that obviously exhibited a lot of transport. So this was the first airborne survey, heli-borne MAG and EM, flown at 100-meter line spacing. 4 days into the survey, a motivated field crew went out and investigated this magnetic high anomaly and found an outcrop of kimberlite, the CH1 kimberlite. A few days later, they investigated this magnetic high anomaly and found the CH2 kimberlite in outcrop. And one of the things to emphasize, not a lot of the kimberlites in Canada crop out, especially in the Lac de Gras region. So this was fairly unusual and, quite a bit unexpected to see kimberlites cropping out like that. And after a lot of work in 2016, Peregrine declared a resource at 22 million carats in 2 pipes. And the CH6 pipe was the richest. And in 2014, valuation of a 1,013 carat parcel yielded modeled diamond values between US 162 and 236 a carat. That prompted De Beers in 2018 to purchase Peregrine diamonds, principally for the Chidliak project. And De Beers is currently conducting engineering studies to determine whether or not to move towards developing the project. And I think there's a good chance they will. Like Paulo mentioned, they are experimenting and studying a number of vertical mining methods to optimize mining of some of the smaller pipes. One of the things that can't be emphasized enough is the part that the investor played in all the great Canadian discoveries. I mean, billions of dollars invested, and a lot of that from retail, quote, mon pa investors. And a lot of money was made, a lot of money was lost, but it was a very exciting time in the markets in North America. And this chart just illustrates the story of one extremely successful company, Diamet Minerals. Okay. This is their stock chart with value per share on the y-axis and time on the x-axis. They made the discovery in 1991. You can see leading up to the discovery, their stock traded for pennies. They made the discovery and the stock price just kept rising for years through the development stage, the opening of the mine, and finally in 2001, BHP bought the company for 687 million Canadian. Okay, they only owned 29% of the Ekati mine. And that gave the Ekati mine at that time an implied project value of 2.37 billion Canadian. And another thing to emphasize is through this period, Diamet did some placements and raised money, and they did a lot of exploration in Canada and throughout the world. So they made this great discovery, but it also allowed them to do more exploration. So now I'm just going to summarize the Canadian diamond business. Between 1998 and 2020, there have been close to 264 million carats of diamonds produced from 7 Canadian mines. And the value of that production is roughly 31 billion US or 39.6 billion Canadian. Okay. One of the things that's interesting, there's been quite a big fluctuation in the value of the diamonds produced from the Canadian mines. You can see that on this chart with value on the y-axis, year on the x-axis. The peak of Canadian diamond value was $236 a carat in 2011. A lot of that was a big high in the diamond market and diamond prices, but it also related to the mix of production. There were some pipes with very high value diamonds being mined at that time. And the value in 2020, the average value was US 71 a carat. You can see by this pie chart in 2011, with that high value, Canada produced 18% of the world's diamonds by value, ahead of South Africa, ranking 3rd in the world. Okay. 2020 was a year affected by the pandemic, but the patterns more or less hold. In 2020, Canada was ranked 4th, tied with South Africa for the value of its diamond production, 0.93 billion or 10%. And they tied for number 3 in the volume of production with the Congo, 12% and about 13.1 million carats. For reference, in 2020, South Africa produced about 8.5 million carats of diamonds. A real important thing and a very spectacular thing that's come out of the Canadian business is all the benefits for the communities and Indigenous communities in Canada. Without the diamond business, the capital of the Northwest Territories, Yellowknife, and a lot of the communities would be a dramatically different place. It's really contributed a lot to the development of the regions. In 2016, the Northwest Territories and Nunavut Chamber of Mines published a paper summarizing the benefits that had been produced by the Canadian diamond business in the previous 20 years. As an example, in 2016, 3,761 person years of employment, with 21% of that being Indigenous. 1.4 billion in business spending, 23% of that Indigenous. And 11 million in community benefits just in 1 year, with 390,000 of that being scholarships. One of the accomplishments, I think, of the diamond business is the education level in a lot of the smaller communities near the mines, where a significant percentage of people have worked at the mines, has gone way up. A lot more people are graduating from high school, and a lot more people are going to university. And just to summarize, between 1996 and 2016, 26,441 person years of employment, 18.7 billion in business spending, with 30% of that being with Indigenous businesses, many of which were created just to service the mines and exploration programs. Another thing the Canadian diamond business has done for Canada, but really for the world, is built a heck of a lot of capacity for diamond work and mining and exploration work in general. Hundreds or thousands of geologists, technicians, engineers, pilots, etc., were trained through this Canadian diamond rush, and many of the people were from Indigenous communities. Also, at least 3 specialized laboratories devoted to diamonds really evolved and improved their techniques and purchased lots of equipment because of all the work from the Canadian diamond business. And millions and millions of dollars spent on research related to diamonds, diamond mining, and kimberlite. You know, the Geological Survey of Canada and provincial surveys receive grants every year to publish papers and research projects to support the diamond exploration and mining sector. And as an example of one university, the University of Alberta, since 2014, 28 MSc and PhDs completed related to subjects focused on diamonds and kimberlites. Quite a bit of knowledge gained. And when you talk about the Canadian diamond business, you really have to give a shout out to BHP Billiton. In 1990, they came out of nowhere with no interest whatsoever in diamonds to eventually produce 5 to 10% of the world's diamonds for 14 years. They entered the business in 1990 through the Lac de Gras JV, and they went out and hired the best expertise available, and to their exploration and mining program applied their long-established mining experience and management structure to their work. And it's really remarkable. The first discovery in 1991, mine built by 1998, record time. I don't think I was the only one that first saw these discoveries and thought, oh, there's no way they're going to build a mine in that environment. My goodness, you know, snow on the ground 6 months of the year, 20 below half the year, most of the kimberlites covered by lakes, 300 kilometers from tide water, et cetera, et cetera, et cetera. But the engineers jumped in, drained the lakes, used ice roads to supply the mine site, and without hardly breaking a sweat. In 12 years, two world-class mines developed in the Lac de Gras region. Quite an engineering feat. Another thing BHP did was a lot of aggressive diamond exploration in Canada and throughout the world. Their work led to many discoveries in Canada. Then in 2011, they decided they wanted to get out of the diamond business. In 2011, they sold their Chidliak project to Peregrine for $9 million. In 2012, after 14 years of big profits, they sold the Akati mine to Dominion Diamonds for US $553 million and exited the business with no reclamation obligations. They were gone, left almost without a trace. So now I'm going to talk a little bit about the potential future of the Canadian diamond business. Without any new mines, mine expansions, or significant new discoveries by exploration, the business could cease by 2030. What are the ways that we can keep the business going? Well, there's 4 operating mines, and at each one of those, there's a potential to extend the lives. There's 6 undeveloped Canadian diamond resources, and I don't think the exploration potential of the vast country has been fully tapped. So first, summarize the operating mines. 4 operating mines: Akati and Diavik in the Northwest Territories, Gaucho Quay in the Northwest Territories, and Renard in Quebec. The 3 closed mines are Victor in Ontario, Snap Lake in the NWT, and Jericho in Nunavut. First, Akati, the first mine that opened. Between 1998 and 2021, Akati has produced 86.3 million carats of diamonds, and they have 28.4 million carats of reserves. So far, they've mined 9 pipes, and in 2023, they're going to start their 10th open pit on Point Lake, which ironically was the first discovery in 1991. Right now, the mine is scheduled to close in 2029, but they are doing some pretty interesting exploration on the site, and they are also studying a new concept of mining, underwater remote mining, where they would float mining equipment on the water at the bottom of spent open pits and mine out material that was really not economic to mine in an open pit. So that's a really interesting experiment and kind of fits with the vertical mining solution that a lot of people are looking at. Diavik. 4 pipes mined between 2003 and 2021, 142.4 million carats mined through December 2021. And right now they list 11.9 million carats of reserves. The mine is scheduled to close in 2025, but they are doing some brownfields exploration that, if they're lucky, will extend the life a year or two. Renard opened in 2016. Between 2016 and 2021, about 7.5 million carats of diamond produced. They listed an initial reserve of 22.3 million carats when the mine opened. Renard has struggled to meet the goals that it set in its feasibility, but things are improving. Q1 22 was their best quarter ever, 409,000 carats produced at a average value of US $143 a carat. You can see over here on this table, their previous high before that was less than $100 a carat. And finally, Gaucho Kwe, a 51%, 49% De Beers Mountain Province joint venture. So far, they have mined 34.5 million carats through Q1 2022, and they list 42.6 million carats of reserves. Right now, the estimated closure is 2030, and Q1 2022 was their best diamond value to date, US 132 a carat. And prior to that, Gaucho Kwe, like Renard, did struggle to meet the value projections in the Mountain Province feasibility study, with the values being well less than $100 a carat. There is some blue sky at Gaucho Kwe. They are working at the mine site to try to prove up more resources, and Mountain Province, the 49% partner in the mine, is doing some pretty aggressive exploration to the north, and they have some resources that ultimately could come into play here at the mine, maybe be mill feed in the future or be developed on its own. So there are 6 declared off-mine site resources in Canada at this time, some of which could be developed. First, Chidliak, which I told you about, 22 million carats and 2 pipes. $4 corn in Saskatchewan, a joint venture between Rio Tinto and Star Diamond, 66 million carats and 2 pipes. Rio Tinto spent over 140 million since 2017 evaluating pipes in this district. Nauyat in Nunavut, a joint venture between North Arrow and Burgundy, 26 million carats and 1 pipe. And this project is known for a significant component of fancy yellow orange diamonds. And they're hoping that that can dramatically increase the rock value. Kennedy North, which I told you a little bit about. This is Mountain Province, 10 kilometers north of the Gaucho Kwe mine, 21 million carat and 2 pipes, and pretty aggressive exploration. Another pipe, DO27, which is located 30 kilometers from Diavik, 18 million carats and 1 pipe. DO27 has a really interesting history. It was discovered in 1993 prior to the Diavik discoveries, and it was a joint venture between Rio Tinto's subsidiary Kennecott and a few junior companies at the time, and it showed quite a bit of economic potential. And Rio Tinto skipped kind of the mini bulk sampling stage and went right from microdiamonds to the collection of an underground bulk sample, and it created an unbelievable amount of excitement and expectation in the market. So in 1994, when they announced results that dramatically did not meet expectations, the market for diamond exploration companies just melted down. Stocks, all of them, just dropped like a rock, and it affected people's ability to explore for a few years. And finally, there's a dike, Kahuna, in southern Nunavut that has 4 million carats of pretty decent diamonds in 1 dike. So exploration, I think there is still potential to make another discovery that could matter in Canada, but there are some challenges. Exploration expenditures and activity are way down The sector no longer has the undivided attention of investors. 10 or 15 years ago, there were probably 100 junior companies with Canadian diamond exploration interests, and a lot of the stocks were trading, and there was a lot of exploration activity, all disclosed to the public. Today, there's probably less than 10 companies with diamond exploration interests in Canada. There have been no recent large discoveries, and we know that most value and excitement is created with a new discovery. The last discovery of a Canadian resource was Chidliak in 2008. Most of the current work by the Canadian companies is on established projects. There's not a lot of grassroots exploration. And some people say maybe the easy ones have been found, and there's a perception by some that Canada has been fully explored, which I don't ascribe to that. So what are some of the opportunities right now? As Paul mentioned. Okay, thank you. Diamond prices are up, supply is down. The world needs new discoveries. A great discovery will stimulate more exploration. The active explorers in Canada, De Beers and Rio Tinto, Arctic Star, North Arrow, RJK Trésor, and Mountain Province, and my company, Kraton, are all trying to make new discoveries, and new ideas and technology could help to find the next big one. New geophysical technology, new ideas on glacial systems and sampling methods, advances in indicator mineral interpretation. And another question, why aren't there any Canadian lamproites? There's a bunch of them in the United States. That doesn't seem to make sense to me. Maybe there's a few there, maybe a few with diamonds. Maybe they're just hard to find because they're under glacial cover and they don't have traditional indicator mineral signatures. And there's been a lot of work on basement terrains and diamond ages that are changing a few people's thinking about where you should explore. Maybe it's not just stable Archean cratons. Maybe some places, Proterozoic places with good keels, warrant exploration. And a real development in the research was finding that diamonds at Victor Mine in Ontario were 700 million years old. So that makes you think about a few things when you're targeting areas. So to conclude, Canadian diamond business, spectacular story of discovery, growth, and benefits. No one in the 80s thought that anything like this was a possibility. And before you know it, Canada was the third leading diamond producer in the world, ahead of South Africa. A huge capacity for diamond exploration and mining has been developed, and we need to use that capacity to find something that'll extend the life of the Canadian business to another generation or two. Could something similar happen again, a great discovery like this in a new business, happen again in Canada or anywhere else? I think it is possible. Came out of nowhere in Canada. So before I finish, I just want to make a shameless promotion for the Prospectors and Developers Association of Canada annual diamond session. It's virtual this year on June 28th, 11:15 EST. If you haven't had enough of presentations from this short course, think about joining us. It's a real interesting topic, diamond price estimation. And I'm going to give a short intro. I'm a co-chair, but talks by three experts in the diamond valuation area: Malcolm Thurston, John Armstrong, and Andy Davey. And if you're a student or a senior, your registration is deeply discounted. So I've been in diamond exploration for a long time in North America, and it's been a real exciting time to be doing it in North America. It's been really met a lot of great people, and I'm still out there trying to make a new discovery that might make a difference for the North American diamond business. So with that, I'll close, and if there's time, entertain a question or two. Thank you very much.
Thank you very much, Brooke. That was most interesting. Yes, and we do have a couple of moments left for some questions. Anybody have a question for Brooke?
Brooke, as normal, I'll get the session going. Just in 2 minutes, we want your take. One of the big differences of in Canada, obviously, was you talk about the staking rush and the fact that you could get on the ground so quickly. Just give us a quick synopsis. If you were going out today to pick up a piece of ground, in Canada to look for diamonds, tell us how you do it.
Well, it's in northern Canada, it's really easy. Most of the permits are available online. You can just decide what you want to acquire, and it's relatively cheap to acquire the permit, but then your commitment to do work accelerate quite rapidly, so you got to spend a lot of money. So for most of Canada, especially the remote regions, the northern regions, it's easy. Just go online, define an area that's not already taken, and click on it and have your credit card ready. But as you move south, so all of northern Canada, it's virtually all crown minerals. But as you get to the south towards the US, there's a lot of agricultural land. The farther south you move, the less percentage of crown minerals there are. So there's also quite a bit of private mineral rights to the south. So in the south, it's not quite as easy. And one of the things I'll say is there are still a lot of places in northern Canada where you can acquire permits and explore for diamonds and that are prospective, but there's a lot less appetite today than there was during the frenzy of the initial Canadian diamond rush to spend the kind of money that's required to explore these remote regions, because they've all been explored to some degree. Still a lot of work you can do, but it's so expensive. So that's been a bit of a deterrent to a lot of the northern exploration in Canada lately.
No, thanks. That's great. That's very useful and explanatory, particularly for us South Africans, who don't really understand how easy it is to pick up ground, as you say, particularly in the north. The flip side, of course, being the difficulty operating at -20, and I think in some places -40, and having to take on all your supplies on an ice road during winter. Anyway, thanks for that. All right, you're going to do the chat box.
Yeah, we have a couple of questions on chat box from Sean Johnston first. Have any companies applied remote sensing to detect outcrop regions? And then what is the impact of permafrost on mining abilities, such as methane production restricting explosives?
Okay, two good questions. And the first is yes, hyperspectral remote sensing has been used by people like De Beers and others in areas where there's significant outcrop. A lot of Canada, there's 10, 20, 30 meters of glacial cover, and it's not quite as effective, but there have been some studies that have shown a really good hyperspectral anomalies associated with outcropping or subcropping kimberlites. The second is permafrost. Permafrost is a really big factor. A lot of the places I've worked, the permafrost goes down 300 meters. Okay, that can be a positive because you don't have an issue with water coming in and everything, but you have to make sure your hole stays open and the water you use in your drill process does not freeze. So there's a mixture of salt you use to keep the holes open. Then going into mining, it's kind of a benefit because the walls hold up. In fact, I believe at a couple of the mines, they actually put in a freeze curtain to maintain the permafrost so that it doesn't melt and create a mess when you open up the pit. So I don't think it has an effect on explosives. I think it's pretty darn hard rock, and I don't know that it has an effect on explosives. So, but it is a major factor. A lot of the areas I've worked, the top meter or two is not permafrost, but then down to hundreds of meters, it's permafrost, ice, frozen rock.
Right, so Farnes spent 24 years with De Beers as a research geologist, and then he joined the University of Johannesburg to take up the DSI NRF research chair in geometallurgy. And his research interests mostly involved the study of kimberlites, diamonds, and mantle xenoliths. So Farnes, we look forward to your presentation on the characteristics, origin, and evolution of diamonds.
Right, the purpose of this presentation is to discuss the characteristics, origin, and evolution of natural diamond with you. And so by way of introduction, I'll be talking about diamond characteristics. I'll be dealing with shape, size, color, infrared characteristics. I will then follow up with a discussion of diamond genesis in terms of diamonds and kimberlite, cratons in the lithosphere, mantle xenoliths and inclusions in diamonds, diamond thermobarometry, carbon isotopes in the age of diamond. And then finally, I will finish off with a discussion of the evolution of diamond and a specific focus on diamond surface features. Right, when diamonds crystallize, they typically crystallize as an octahedron, as you can see here. And they may also be twinned, in which case you would end up with these flat macles. And so these are some examples of octahedral stones. A nice octahedral stone over there and over here, some over there. And if you look over here, you'll see a flat triangular stone, which is your typical macle shape. Moving on to cubes, if diamonds crystallize at a somewhat lower temperature, they crystallize as a cube. And that may also represent itself or present itself as a re-entrant cube, which is also likely due to twinning. Now, many of these cubes are opaque, as you can see here. Some do tend to be gem quality. For example, these two, which are from the Zwaneng diamond mine in Botswana. But for the most part, they tend to look like this, or they are individual cubes, in which case they're typically gray, or they may also have a yellowish color to them due to the comparatively low nitrogen aggregation state in them, as well as a high nitrogen content. And so moving on to coated diamonds and bort. This is bort, which is essentially a form of polycrystalline diamond and which is completely opaque. In fact, a lot of the time it has a sort of dark gray to black color that is crushed and used in industrial applications. When it comes to the more traditional coated diamonds, you can see some octahedra here with black coats on them. Some of the coated diamonds do actually contain a clear core, as you can see here, and that's then surrounded by this more cloudy growth zone of diamond. An example here of an octahedral stone with a coat that has been partially broken off. And here you can see a cubic stone that has some great diamond coat on it. The other more common form of diamond is what is known as a dodecahedron. The dodecahedral form of diamond is not a crystallization form. It is actually a resorption form. And so your diamonds crystallize originally as octahedra in the mantle. As they then end up in a kimberlite and are being transported to the surface, because the kimberlite is hot and oxidizing, the diamonds are then resorbed down to the more dodecahedral form, as you can see here. And essentially what happens is your triangular faces on the octahedral stones are progressively resorbed. As you can see here, with progressive resorption, you essentially lose that triangular face and you end up with these six-sided faces, as you can see here. And these are commonly known as dodecahedral diamonds. They are actually technically more correctly described as tetrahexahedroidal diamonds. Some examples of large diamonds, that being from the Cullinan diamond mine, and that also from the Cullinan diamond mine. If you look at these stones closely, you can see that they are very typically damaged. They're typically broken. And I would imagine that much of that damage is due to the recovery process. It's very common to have a 25 millimeter spacing in the crushers, and obviously these stones are significantly larger than that, and hence likely to be damaged in the recovery process. When they are not damaged, they have these very unusual potato-like shapes, and many of these large diamonds do contain low to no nitrogen. So I would imagine that much of the shape that you see here is due to resorption in the kimberlite, but the resorption is assisted by the low nitrogen content of these diamonds to give you these unusually smooth, rounded off morphologies. Diamond color. Diamond color is typically influenced by impurities in the crystal lattice. And so, for example, if you have nitrogen structurally bonded into the crystal lattice, you would end up with a yellow color. In cases where you have nitrogen-free diamonds, but that contain boron, you end up with a marked blue color for the diamonds. Diamond color may also be influenced by defects in the crystal lattice. And so, for example, diamonds reside in the mantle at high pressures and high temperatures, where they can be easily deformed. And so if there is, for example, cratonic deformation through, for instance, mountain building processes, or for that matter, sampling of the mantle by the kimberlite may also deform the surrounding mantle, you would end up with essentially pink, brown, red, or purple diamonds due to the plastic deformation. Diamonds that are weathered out of the kimberlite and end up in the alluvial environment may be affected by irradiation when they are in touching contact with radioactive minerals. And in that instance, you get lattice damage. So it is not just surface coating, it is actually lattice damage that penetrate into the diamond for a couple of microns. And in that case, you get green spots and stains. It's important to emphasize that these green spots and stains cannot be removed through acid boiling, for example. They are there, and it's a permanent form of surface damage. Green spots and stains on diamonds may be turned into brown spots and stains through heating. And so an instance of that would be if your diamond's in a alluvial deposit, in a sedimentary deposit, is then caught up in a metamorphic process where these green spots and stains, through heating and metamorphism, is turned into brown spots and stains. And that's quite useful as an exploration tool, because if you see diamonds, abundant diamonds, with brown spots and stains, it may very well be that your diamonds have been through more than one cycle of deposition and subsequent erosion, maybe a mountain building process of some sort, and hence your diamonds could be a significant distance from source. Then diamond color due to primary inclusions. We're talking here about things like graphite inclusions as well as sulfide inclusions in diamonds. If you have an abundance of graphite inclusions or an abundance of sulfide inclusions, the diamonds are very typically gray or black. We do also find a subpopulation of diamonds which have an ivory white color or maybe opalescent. And in that instance, the color of the diamonds are most likely due to swarms of micro-inclusions that are distributed throughout the diamond. And the nature of those inclusions is still comparatively poorly understood. Some examples here are, for example, black diamonds or gray diamonds. As you can see, some examples of colorless diamonds, yellow diamonds over here due to high nitrogen contents, and some examples here of blue diamonds, low nitrogen content, along with boron, contained in the crystal lattice. Some stones here that are essentially variants of orange or brown, probably due to plastic deformation. And then this peculiar chameleon green color, as you can see here, due to a combination of nitrogen in a low aggregation state, possibly combined with plastic deformation in the mantle. Moving on to polished stones to illustrate color, you can see some nice pink over here. Some very typical blue over here. This would be considered fancy blue. Colorless stones over here, obviously. And then again, brown to maybe somewhat of an orange color, as well as something here that incorporates more of some slightly purplish tinge to the color. Over here, a stone with a sort of an olive green color. Now we can use infrared spectrometry to distinguish different types of diamond. Using infrared spectrometry, we can detect structurally bonded nitrogen, and those are known as type 1 diamonds, which are often yellow in color. And again, using infrared spectrometry, we can also detect nitrogen-free diamonds, which are usually colorless, but may also be blue if they contain boron, and these are known as type 2 diamonds. Still on the subject of an infrared spectrometry of diamond, this is a typical infrared spectrum of a nitrogen-containing diamond. And along the horizontal axis, we have wave numbers, which is essentially the number of cycles that you have in your infrared region of the optical spectrum per centimeter. On the vertical scale, we have absorbance, which is essentially how much of the infrared radiation is absorbed by the diamond as the beam passes through the stone. Over here, we have the nitrogen region. And so nitrogen-containing diamonds, which show peaks in this region. Over here, we have a platelet peak, which relates to the movement of nitrogen through the crystal lattice as it aggregates in the diamond crystal lattice. During that migration of nitrogen through the crystal lattice, there are also clusters of carbon atoms that form, and these have a very specific vibrational bond, which is known as the platelet peak. And moving on to this region over here, these are carbon-carbon vibrational bonds in infrared spectroscopy, and it is unique to diamond. So if you have a colorless mineral and you would pass an infrared spectrum through it, and you see these peaks over here, you can be fairly certain, or you can be almost 100% certain that you are dealing with a diamond. These are carbon-carbon vibrational bonds. Over here, some diamonds do contain hydrogen, and when they do, you have carbon-hydrogen vibrational bonds, which shows up in this region of the infrared spectrum. Now, the nitrogen in diamond is originally captured as a carbon-nitrogen substitution. And that's very typical of diamonds that are very young, or for that matter, of diamonds that are synthetic in origin. Natural diamonds, because of the temperatures in the mantle and because of the mobility of nitrogen through the crystal lattice at high temperature, along with time, results in a different type of aggregation of nitrogen in these natural diamonds. And so, for example, a diamond that has crystallized fairly recently at high temperature and has had a little bit of time for the nitrogen to aggregate would have an infrared spectrum that looks like this. So this is an individual stone that I've selected specifically to demonstrate this. It contains 24% nitrogen in the highly aggregated B form. And this stone, in this specific instance, contains on the order of 300 ppm nitrogen. This is another diamond that I've selected to illustrate what a stone with somewhat more aggregated nitrogen would look like in terms of its infrared spectrum. This is known as a 1A-B aggregation state. So this would be classified as a 1A-AB diamond. It contains 73% of the nitrogen in the B component, in the highly aggregated B component, for this stone, which contains on the order of 400 ppm nitrogen. And you can see that this peak, particularly in the nitrogen region, is now more pronounced. And then finally, a highly aggregated stone, which contains virtually all of its nitrogen in the 1AB aggregation. This stone contains 98% of its nitrogen in the highly aggregated B state. This stone contains 600 ppm nitrogen. And you can now see that this peak is very pronounced. So for all intents and purposes, the height of the peak, the height of these peaks corresponds to nitrogen content, and the shape of these peaks correspond to nitrogen aggregation state, as you can see here. That being poorly aggregated and this being highly aggregated nitrogen. Now, again, this is potentially a useful tool. We do find that some kimberlites contain diamonds which are predominantly of this aggregation state, and we do recognize some kimberlites where the diamond population tends to be more dominated by this aggregation state. And that, in combination with nitrogen contents, which can be highly variable between different diamond sources, allows you a tool to essentially make a call with regards to the source of diamonds from different kimberlites which have been amalgamated into an alluvial source. The other thing that is quite useful is that you can make a call with regards to how long diamonds have been resident in the lithosphere. For example, some kimberlites have an abundance of diamonds that look like this. And we think that those diamonds have been sitting in lithosphere for a comparatively short period of time, maybe on the order of hundreds of millions of years, while kimberlites that have an abundance of diamonds that look like this in terms of its nitrogen aggregation state probably contain diamonds that are somewhat older than that. But I must emphasize that the errors are huge in infrared spectroscopy. And so to use this as a speedometer in terms of dating diamonds is not particularly successful. This is an example of a nitrogen-free diamond. As you can see here, there are no nitrogen peaks present. We classify these diamonds as type 2A diamonds. And that's an example of what these stones look like. For example, these are nitrogen-free diamonds from the Letseng diamond mine in Lesotho. We also encounter these diamonds from the Karowe mine in Botswana, and that's a very typical nitrogen infrared spectrum. There are no nitrogen peaks present. When we do encounter blue diamonds, as you can see here, a nice polished stone of a fancy blue, you can see again that we have no nitrogen peaks present in the nitrogen region, but what we do see here is vibrational bonds which correspond to boron. And I would imagine that these are carbon-boron vibrational bonds. You can still see the carbon-carbon bonds over here, so we're clearly dealing with diamond, but these peaks over here are very typical of boron-containing diamonds with their marked blue color. Right, I want to move on to diamond genesis. And so if we are talking about diamond genesis, we have to discuss diamonds and cratons. This is a map, a global map, with the red areas here essentially outlining the oldest parts of these various continents. And so if you have areas of the world where the continent, the cores and nuclei of these continents contain very old rocks, and particularly Archean rocks, on the order of 3 to 3.8 billion years old. These are the regions that are known as cratons. If we look at these cratons in detail in terms of diamondiferous kimberlites, you can see that many of these cratons contain diamondiferous kimberlites, of which, of course, there's the classic one, the Carval craton over here. And then we also have regions where there are diamondiferous lamproites. This forms the basis of diamond exploration, and it's based on something that was originally recognized by Tom Clifford, probably by now a generation ago, and it's commonly known as Clifford's rule of diamond exploration. Now, why is this the case? And so what I want to do here, I want to take you on a journey through old continents, and particularly what lies underneath the oldest parts of continents, which are known as cratons. Over here, we have a vertical scale. This goes down to 400-kilometer depth. In this region, we have an area which is known as the lithosphere, which is old, cold, and very thick. And it is underlain by something which is known as the asthenosphere, which is hot and presumably oxidizing, and hence we will not have diamond present within the asthenosphere. In the case of the lithosphere, on the other hand, we have a lower boundary over here, where diamond may be present on top of it. Below this boundary, we have the asthenosphere, which I've said before is hot and oxidizing. Within this region, we have an upper boundary, which is essentially the graphite diamond in inversion curve. Above here, you will have graphite present. Down here, you will have diamond present. This region, therefore, may contain diamonds. We do think that the diamond distribution of the lithosphere is not necessarily homogeneous, that it is quite heterogeneous, primarily because we do find kimberlites that have penetrated this region, but that do not contain diamonds. And so, to take that a bit further, it would appear that much of the diamond budget within the lithosphere could very well be due to the passage of fluids into this lithosphere, presumably from emanations out of the asthenosphere, or maybe even from degassing of the core. Another source of these fluids may very well be that we have plumes coming up from the asthenosphere, or from the core mantle boundary, or the upper mantle, lower mantle boundary. And these plumes may also impact on the lithosphere and release fluids, which may again result in diamond crystallization. The other thing to note is obviously that you have subduction zones over here on the edges of continents. Those subduction zones may also carry oceanic carbon into the subduction regions, in which case there may be a case to be made for a link between subduction and the crystallization of diamond, which I will explore a little bit further later on. The graphite diamond transition here dips towards greater depths along the edges of the cratons as you start going into the off-craton regions. And the reason for that is that the heat flow from the asthenosphere becomes more pronounced in these regions. So these regions of continents are significantly hotter than these cold and very thick regions of the lithosphere in the centers of continents where you have your oldest rocks and therefore have your cratonic regions. And so any kimberlite that passes through these regions of continents are likely to be barren, because we're essentially dealing with an off-craton environment. And any kimberlite that passes through this part of the oldest regions of continents, which are underlain by old, cold, and very thick lithosphere, could potentially be diamondiferous. Right, so if we move on a bit with regards to the rock types that makes up the lithosphere, this is a diagram demonstrating the abundance of olivine, orthopyroxene, and clinopyroxene as a classification scheme. And so if you have rocks that consist of orthopyroxene, clinopyroxene, and olivine, they would be considered to be lertzoleites. Rocks that consist of orthopyroxene and olivine we call hartsbergites, and particularly in the case of the lithosphere, hartsbergite and lertzolite makes up the lithosphere, and these two rock types in combination is known as peridotite. They both may contain accessory garnet, and they both may contain accessory spinel. The spinel may be either an aluminous spinel or it may also be a chrome-rich spinel. It is commonly assumed that hardspergite is essentially a highly depleted form of lertsolite in that it does not contain clinopyroxene, and it also contains significant chrome and very low calcium contents, and hence the minerals that occur in hardspergite tend to be very chrome-rich, but tend to have comparatively low calcium relative to lertsolite, which contains clinopyroxene, which is full of calcium. We also distinguish another rock type within the lithosphere, which is known as pyroxenite, consisting predominantly of orthopyroxene, as well as clinopyroxene. And if pyroxenite contains a certain amount of chrome, we call them websterite rather than pyroxenite. And then finally, over here, if you have a rock consisting of olivine as well as clinopyroxene, that rock would be known as a whorlite. So if we move on from this, this is very typical and of what we find in kimberlite in terms of xenoliths derived from the lithosphere. Remember, we cannot access the lithosphere. You're looking at rocks that are sitting at 150 to 200 kilometer depth. The base of the crust is on the order of about 65 kilometers. And so we cannot physically access these areas. We have to look at xenoliths that comes up in kimberlites. The peridotite xenoliths that comes up in kimberlites consist of garnet as well as orthopyroxene and olivine, all of which these are highly magnesian. The garnets in particular contain low chrome, or may contain low calcium, and will contain high chrome. If we are dealing with lertsolites, there will also be a certain amount of clinopyroxene present in this rock. But these are essentially high chrome lithologies. The other rock type that we find as xenoliths in kimberlite is eclogite. Remember, I said we have subduction processes. Subduction processes most likely bring oceanic crust into the lithosphere, and hence we have eclogite forming. Eclogite is a low chrome rock type, which has high iron content. And so you have orange garnet, as you can see here, and you have a sort of a khaki green clinopyroxene, as you can see here. This is a low chrome rock type, and it tends to be iron rich. Now, there's a close link between these rock types and diamonds, in that if we look at diamonds, we break them open and we pull out the inclusions that occur in them, we can classify both a peridotitic suite of diamond as well as an eclogitic suite of diamond. And so, for example, here is a diamond that contains a chromite inclusion, and hence we would consider this to be a peridotitic diamond. Here is a diamond that has a purple garnet inclusion. That garnet has low calcium content and high chrome content, and hence we would consider this to be a peridotitic diamond, and particularly a hardspergitic diamond. Over here we have an eclogite with orange garnet, and the eclogite has a little diamond embedded in it. Here we have another eclogite, again with orange garnet, and it has a diamond embedded in it. This is a diamond with an orange garnet inclusion in it. That orange color is a sure enough indicator that you are dealing with an eclogitic garnet sitting in this diamond, and hence we consider this to be an eclogitic paragenesis diamond. There's a fragment of eclogite, a fragment of peridotite because of the color of the garnet over here, and it is diamond bearing. Over here we have another diamond bearing eclogite, and over here we have a diamond with a sulfide inclusion in it. Now, these sulfides in diamonds are quite interesting because we can distinguish peridotitic sulfides, which have high nickel, and we can also distinguish eclogitic sulfides, which have low nickel. Hence, we have peridotitic diamonds with sulfide, and we have eclogitic diamonds with sulfide. Much of this diamond research have now resulted in a significant database. If we interrogate that database in terms of diamond paragenesis, we find that the global database comprises of predominantly peridotitic diamonds, followed by a much smaller abundance of eclogitic diamonds and a very small abundance of websteritic diamonds. So what I'm trying to say is diamonds that contain inclusions are predominantly peridotitic because they contain peridotitic inclusions. The suite of eclogitic diamonds contains eclogitic inclusions, and the suite of websteritic diamonds contain websteritic inclusions. Then we also have a very minor sublithospheric suite of diamonds, which are very unusual and bear no resemblance to this lot. These diamonds are from great depth within the asthenosphere, probably brought there through subduction processes where the pressures are so high that, for example, the garnet contained in these diamonds contain clinopyroxene in solid solution in them. This is still the subject of much research. If you are interested in that, I would refer you to this paper, and I would argue that the nature of these sublithospheric diamonds is still comparatively poorly understood. If we break up the peridotitic suite of diamonds into these components, we find that 86%, so the majority of peridotitic diamonds, are actually of a hard-spagitic paragenesis, while a comparatively minor proportion of peridotitic diamonds are of a lertzolytic paragenesis, and then, quite frankly, a vanishingly small population of the peridotitic diamonds are of a whorlitic paragenesis. If we look at that classification in more detail by interrogating the chemistry of garnets occurring as inclusions in diamonds in terms of their chrome content as well as their calcium content, you can see that we essentially have two fields on this diagram, one of which represents peridotitic garnets occurring as inclusions in diamonds. And the vast majority of those peridotitic garnets occurring as inclusions in diamonds plot to the left of what is known as the Gurney line. So on the order of 85% of peridotitic garnets occurring as inclusions in diamonds plot in this field over here, which is known as the Hartsbergite field. This forms the basis of much of the world's diamond exploration. If you find garnets in your prospecting program that plot somewhere in this part of the diagram, then the assumption is because of the fact that they are so abundant as an inclusion in diamonds, that you are potentially onto a potentially diamond-bearing kimberlite. And the theory of that is discussed in these two papers. Within this field, we also distinguish what is known as low calcium hardsbergites. For example, less than 2% calcium would classify a garnet as a low calcium garnet, and therefore those would be known as low calcium hardsbergitic diamonds, which is a bit of a misnomer, but it serves the purpose. And then over here, this region of the hardsbergite field, we classify as the more calcic hardsbergitic garnets, and hence we also distinguish more calcic hardsbergitic diamonds. Over here is what is known as lertzolytic garnets, and hence those are known as lertzolytic diamonds if you have a diamond that contains garnets that have these chemistries in them. Over here is a field of eclogitic garnets occurring as inclusions in diamonds, and hence we would call these diamonds eclogitic diamonds. That is an example of a diamond containing whorlitic inclusions, and over here we have examples of diamonds containing websteritic inclusions. I want to move on to chromite in diamond. There is another very common inclusion variety in diamonds. And if you look at their chrome and magnesium contents, you find that they have high chrome, between about 60 and 70 weight% chrome, and on the order of about 11 weight% magnesium to about 17% magnesium. And again, this forms a prospecting tool because you see an abundance of chromites in diamond, and those diamonds are peridotitic diamonds because this is a peridotitic mineral because it has this high chrome content and this high magnesium content. If you start seeing these chromites in your prospecting, there's a possibility that these chromites could be from diamond-bearing kimberlites. But it's a lot more complicated than that because you can see the same chemistry is also in chromites from the Bushveld complex, for example. There will be presentations dealing with this at a later stage. These same chromites occurring as inclusions in peridotitic diamonds also contain low titanium content. So again, if you see high chrome and high magnesium and low titanium in chromites in your prospecting program, that's potentially with a little bit of complication involved in it all, that's potentially from diamond-bearing kimberlite. And hence you may be able to sell that prospect on the stock exchange. Now, it is possible to determine the pressures and temperatures at which diamonds crystallize by using coexisting minerals. If you have coexisting minerals occurring as inclusions in diamonds, as they are sitting in the mantle and as they are being captured by the diamond growth event, the diamonds will record, or at least the inclusions in the diamonds will record particularly the temperature, but also the pressure at which those diamonds were crystallizing. And essentially what you do is you look at things like nickel thermometry in the case of garnet olivine exchange, or you look at aluminium barometry in the case of orthopyroxene garnet exchange, and so on. If we make use of these various thermometers and barometers, we can determine that diamonds crystallize at pressures of on the order of 50 kilobar to 70 kilobar, which corresponds to depths on the order of 150 kilometers to about 200 kilometers. And if you look at the temperatures range from about 1,000 degrees Celsius to 1,200 degrees Celsius. This is the graphite stable field. There are uncertainties with regards to the temperatures and pressures that you can calculate, which is pure error bar. But for the most part, our diamonds plot in this region in the diamond stability field, and they sit at comparatively low geothermal gradients. These are geothermal gradients, which is essentially the heat flow through the lithosphere. Within thick lithosphere, the heat flow is comparatively low because the lithosphere is thick and serve as essentially a thermal insulator from the hot asthenosphere. And so at geothermal gradients on the order of about 38 to 40 milliwatts per square meter at surface, you have the right type of conditions for diamond to crystallize. If you have higher geothermal gradients, for example, more than 42 milliwatts per square meter, you will end up in a region where your diamonds, having crystallized originally, if this is a heating event, your diamond will be destroyed again. But essentially for our purposes, if you're looking at thermal gradients of about 38 milliwatt per square meter, that's where your diamonds will be stable. Right, how do diamonds crystallize? We think they crystallize as a series of pulses, and we know that because you can cut a diamond into plates. It's a very simple process. And then if you look at the diamonds, if you look at the interior of the stones using cathodoluminescence, if you irradiate diamonds with electrons using an electron gun, you get what is known as cathodoluminescence. The diamonds essentially glow under the electron beam. And so you can see the internal stratigraphy of the diamond. For example, this diamond has a core which may even have suffered a tectonic event, in which case it may have deformed. It then healed in a subsequent regrowth event, as you can see here. In this case, we have a core to the diamond. That's probably the initial seed on which the rest of the diamond grew, probably through a series of volatile pulses. You can see the same kind of process over here. Note the pulsed type of growth of this diamond, and the same type of thing here. So essentially what this means is that diamonds tend to grow like an onion would grow. It starts off with a core, and then if you have a variety of growth events, which might be related to intermittent fluid flow through the lithosphere, you get progressive diamond growth. Now, because diamond is essentially 99% carbon, you can look at the carbon by burning the diamond and putting that gas then through a mass spectrometer to determine the carbon-13, carbon-12 isotopic composition of diamond. If we do this for peridotitic diamonds, you find that the carbon isotopic composition is comparatively restricted. If we do this for eclogitic diamonds, you find that the carbon isotopic composition is of quite a large range. And some of this carbon isotopic composition correspond or overlap with the carbon isotopic composition of organic matter. And some of this range in carbon isotopic composition also correspond to the carbon isotopic composition of carbonates. For example, carbonates that you might find on the ocean floor associated with pelagic sediment, or for that matter, associated with alteration of oceanic crust. The carbon isotopic composition of organic matter may correspond, for example, to bacteria associated with thermal activity on the ocean floor. And so it would appear that in the case of eclogitic diamonds, there's a strong case to be made for the subduction of organic matter as well as carbonates into the deep regions of the Earth, say at the base of the lithosphere, through subduction of oceanic crust. However, in the case of the peridotitic diamonds, we have to look at this in somewhat more detail. And so if we, for example, model diamond crystallization using theoretical models of the fractionation of carbon isotopic compositions between methane and diamond and carbonate or carbon dioxide and diamond, we can model that the bulk of hard-spagitic diamonds probably crystallize from some form of methane, with a more subordinate population of hard-spagitic diamonds crystallizing from probably carbonates, maybe carbonate-bearing melts or fluids. And if we look at the lertzolytic diamonds in more detail, we can model that, excuse me, that maybe a smaller population of lertzolytic diamonds crystallize from methane, while a more enhanced population of lertzolytic diamonds crystallize probably from carbonates in melts or fluids. Now, that's not necessarily the whole story. Through thermodynamic modeling, it is possible to demonstrate that it may very well be the case that diamonds crystallize from water-rich fluids that form within the lithosphere and which may have its source within the asthenosphere. But for the present purpose, that we are essentially dealing with water-rich fluids that contain methane as well as carbon dioxide, and we can demonstrate thermodynamically that these fluids would be in equilibrium with diamonds. However, depending on compositions and as the temperature changes, as these fluids move through the lithosphere from the high temperature environment into the lower temperature environment, in that flow along the geothermal gradient, you potentially crystallize diamond from these fluids. And so if you have pulses with time, with geological time, for whatever reason, of these fluids, you progressively crystallize diamonds that then become progressively bigger and bigger as they have more contact with these fluids over geological time. Now we can date diamonds. We know how old diamonds are, or at least we know how old diamonds are that are inclusion bearing by using isotopic systems like, for example, the samarium-neodymium system. We're looking at the samarium-neodymium system in garnets as well as clinopyroxenes occurring as inclusions in diamonds. And we can also make use of the rhenium-osmium system for sulfide-bearing diamonds to gain an insight into the age of diamond. So if we date hard spaghetic diamonds, and I'm not talking specifically about diamonds that contain purple garnets in them, that have calcium contents less than 2 weight%, and have chrome contents that are in the order of 10 to 20 weight% chrome, those diamonds typically come out with an age which is Archean, and essentially ages that are in the order of about 3 billion years or so. On the other hand, if you date eclogitic diamonds, and you look, for example, at the samarium-neodymium system for eclogitic diamonds that contain inclusions of garnet and clinopyroxene, we find that these eclogitic diamonds very typically report a Proterozoic age of diamond crystallization. Those eclogitic diamonds tend to start showing these ages at about 3 billion years or so. And so the assumption is that eclogitic diamonds start forming in the late Archean and particularly form in the Proterozoic, probably because Archean processes started to cool down around about here. Over here in the early Archean and particularly in the Hadean, the Earth was still very hot. Temperatures started to drop until we got to about here in the late Archean, and by which stage it was possible for subduction processes to start taking hold at the Earth's surface. And hence, at that time, we were subducting oceanic crust into the base of the lithosphere, and hence there is the option for eclogitic diamonds to start forming in the late Archean and particularly in the Proterozoic. The inference is that these hard spaghetic diamonds, and particularly these highly depleted hard spaghetic substrates in which these diamonds were crystallizing, formed in the Archean through the extraction of komatiite, probably in plume processes that was very prevalent in the Archean. And then in that time, our cratons were forming. And because of the passage probably of methane through this type of material, we were crystallizing these highly depleted hard spaghetic diamonds. Where it gets more complicated and where it gets more uncertain is in the case of litholitic diamonds, as well as the more calcic hard spaghetic diamonds. What I mean by calcic hard spaghetic diamonds is these diamonds contain purple garnets, which are peridotitic, but those garnets are comparatively calcic. They sit fairly close to the Gurney line. And particularly with the recent advent of high precision dating, which was applied about 5 years ago to the Venetia kimberlite, where a team at the university, the Free University of Amsterdam, looked at the age of highly depleted hard spaghetti occurring as inclusions in diamonds, which proved to be 2.95 billion years old, and looked at more calcic hard spaghetti occurring as inclusions in diamonds, also from Venetia, but the more calcic hard spaghetti produced an age of 1 billion years. And so at the moment, the thinking is that litholitic diamonds and the more calcic hard spaghetti diamonds are essentially a Proterozoic diamond source, which probably forms in the Proterozoic through presumably plume processes, which normally result in large igneous provinces, but in the case of the lithosphere, also shows a link between large igneous provinces and the crystallization of litholitic diamonds, as well as more calcic hard spaghetic diamonds. this is all very new, and the technology is currently being applied to, or maybe I should rather say, this technology really needs to be applied more to, for example, places like the premier kimberlite, where we also see these calcic spaghetic diamonds. And I'd be very interested to see what happens there if we apply the more modern high precision dating to those diamonds. Right, let's move on to the evolution of diamonds. And here I specifically want to talk about diamond surface features. If you look down the octahedral direction of a diamond, if you look down the octahedral crystallography of diamonds, you see very specific sets of surface features. For example, trigons, hexagonal pits, and shield-shaped laminae, which is unique to the octahedral direction. If, on the other hand, you look down the cubic crystallographic direction of diamond, you see things like tetragons and crescentic layering, which is again unique to the cubic direction. On the other hand, if you look at dodecahedral diamonds, you see a whole horde of surface textures, and dodecahedral diamonds obviously are the more resorbed form of the primary crystallization forms. And so here, there is no uniqueness in terms of crystallographic direction. What you see is things like terraces, hillocks, low relief, ribbing, and so on. And then finally, if diamonds are released from the kimberlite during weathering and they end up in the surface environment, you may see things like abrasion, percussion, scar, polish, and network pattern, for instance. So what are the agents in producing surface features? Well, first of all, diamond growth, crystal growth would be an agent in producing surface features because we can see the internal stratigraphy now.
5 minutes, Bonus.
Thank you, I'm almost done. Inclusions in diamonds also has an effect on the crystal growth. Twinning has an effect on crystal growth. And remember, we're talking about octahedral stones and cube stones. Mantle residence may also have an effect on the development surface features. And here I'm specifically referring to plastic deformation. If the diamond is plastically deformed and you then pick out the plastic deformation through resorption, you will end up with, for example, lamination lines. Resorption in itself, occurring at high temperature as the diamond is taken to the surface by the kimberlite, will result in a specific set of surface textures. And if we have comparatively lower temperature resorption, you'll see another set of surface textures. Resorption during passage from mantle to surface will obviously affect the diamonds and give us further surface textures. And then if your diamond is sitting in a root zone, for example, or a dike, which takes a bit longer to cool down relative to rapidly extruded volcanic clastics, you will see other surface textures that form. And then finally, if there is transport within the surface environment after the diamond is released from the kimberlite, you have things like alluvial surface textures of surf zone abrasion, wind abrasion, or for that matter, maybe scratch-like markings in the case of glacial transport. It's important again to take note of this diagram. These diamonds are octahedral, poorly resorbed or comparatively little resorbed, and will be dominated by octahedral surface features, while your dodecahedral diamonds, which are highly resorbed by the kimberlite, with no crystallographic orientation in terms of surface, those stones will be characterized by the more dodecahedral surface textures. And so some examples, these are trigons on the octahedral surface of a diamond. Those are what are known as negative trigons. They form at high temperature. You can also see positive trigons where the shape will follow the outline seen here. And those are at somewhat lower temperatures. These are hexagonal features, again, which may be seen on octahedral faces. Still on the subject of octahedral diamonds in the octahedral crystallographic direction, In this case, the growth layers are picked out by the resorption. You can clearly see the individual growth layers, which are now exposed because of the resorption, and the same type of thing there. And then in the case of highly resorbed dodecahedral diamonds, you very typically see things like elongated hillocks, as well as terraces over here, and a nice example there of terracing. And then very typical of diamonds from root zones of kimberlites, which is in a magmatic environment, as well as diamonds from dikes, where you can see these circular features, which are known as microdisc patterns. We think that in these root zones and in dikes, there is an abundance of volatiles exolving from those root zones as they are cooling down. And in that case, these gas bubbles that form within the cooling kimberlite also serves to protect the surface of diamonds from resorption. And so even though there is resorption, you do see these micro disc patterns. And again, that's quite a useful prospecting tool. If you have an alluvial deposit with an abundance of these micro disc patterns, it might just be that you are looking for a kimberlite dike as opposed to a pipe. And then finally, in terms of transport, if your diamonds are eroded out of the kimberlite and end up in the alluvial environment, initial transport will show up as points and sharpest edges abrasion, with an increase in abrasion, which could or might be due to an increase in distance from the primary source. You see more abrasion, which becomes progressively more pronounced, as you can see here, until eventually, with distal transport, you have these ground down surfaces, which is also the type of thing that you might see in, for example, surf zone abrasion. You do have to be a bit careful with this classification scheme, because obviously, if you are caught up in potholes and things, then the distance aspect in terms of distance from source does not apply. And that's it. Thank you. Any questions?
Okay,
Before I get load shedded.
Yeah, unfortunately we have. Finance, I'll kick off. I'm particularly, or have always been fascinated by those pictures of diamond growth. And you know, we all know that there's been a tremendous amount of work done on, you know, mostly small diamonds, but how big is the biggest stone that, you know, people have actually dissected? Have we really dissected a large or portions of a large type 2A diamond, you know, these big white stones?
Yeah, you know, it's the old story. If you're dealing with the big stones, nobody wants to give it to you because they're quite precious.
Sure.
So when it comes to the really big stones, look, all we can really say at this stage, there is a hint that the big stones may have an asthenospheric root to them. But in terms of how old they are, they do not contain nitrogen.
Yeah.
When we do see nitrogen in them, which typically is at a fairly low concentration, that nitrogen tends to be highly aggregated. So it does appear that they are probably from quite a high temperature environment, or they are potentially very old. But you know, that type of thing starts taking us also into that region of sublithospheric diamonds. And at this stage, we're not entirely sure that sublithospheric diamonds really are from the sublithosphere and great pressure. They may actually be from some very unusual lithospheric sources that is poorly understood. For example, carbonates sitting in the lithosphere. So I don't really want to stick my neck out there. Simply, when it comes to the big stones, we actually don't know how old they are.
Yeah, no, it's a fascinating one, and I guess we're going to get onto the clippers with Andy Moore, so watch the space.
Yeah, it's worth exploring, and Andy has actually put quite a lot of thought into that. So let's have a look at his presentation tomorrow.
Yeah.
And Andy has a question right now, I assume. Andy?
I beg your pardon. Thanks for that presentation, Farnes. Excellent. And I liked your comment about the deformation being linked to the actual kimberlite intrusion. And that's sort of what Mercier said about the sheared periddotites. That,
right. Yes,
that is
yes,
also
exactly. Yeah.
So would you link that? I mean, would you be happy with Mercier's interpretation?
Very much so, because I mean, obviously the diamonds are plastic in the mantle, and so if you have, for example, an ocean island basalt plume that burns its way into the base of the lithosphere, and you then convert that plume into kimberlite through the assimilation of maybe a carbonate sitting in there, which is one model for the generation of kimberlite. That process is likely to be an extreme process in terms of mantle deformation. So it would not surprise me if much of the plastic deformation that we see for diamond is due to this process of kimberlite initiation within the deeper reaches of the lithosphere. Yeah.
We've got a question in the chat by Jürgen, I think it is. How does the occurrence of diamonds of Archean age fit in with the supposedly high geothermal gradients in the early lithosphere?
Yeah, that is very true. When I say high temperatures, I don't mean ridiculous temperatures. Once you start going into geothermal gradients, where you are actually totally inside the graphite stability field, I don't think the temperatures in the Archean was that hot. In the Archean, one probably quite realistic model for the formation of the lithosphere is that you have plume activity in the Archean, which started to die down towards the late Archean, at which stage subduction starts taking hold. But because of that plume activity, as these plumes rise through the asthenosphere, they melt. It's essentially melting related to the pressure release. And so we produce komatiites. But in that process, you also produce a residue which has lost a certain amount of its iron. And hence you start forming essentially rafts, which then floats to the surface and forms the proto-continental nuclei. And those things would already have lost quite a lot of heat and would actually have served as a type of cork that essentially shields that substrate itself from the asthenosphere. And hence one could argue that, yes, the temperatures are higher in the Archean, but it was still low enough within these lithospheric rafts for diamond to actually be stable. So far, we haven't actually seen any evidence that the Archean diamonds have higher temperatures in terms of the inclusion thermobarometry than what we see for the temperatures in the Proterozoic diamonds. So all I can say is, yes, the temperatures are higher, but it wasn't high enough for diamond not to be stable.
Yeah, just to add, Farnus, it's a good question and a good answer. And I mean, you might just point out, that we found diamonds coming out of the Wits conglomerate. So those diamonds must have come from a source, older than what, 2.9. So, 2.9 billion. So, you had an environment back then, maybe not sort of from certainly not from 4.6 to maybe, 3.8, but you certainly thereafter had an environment in the Archean or Hadean to, form diamonds, preserve diamonds, and get them to surface. Yeah,
exactly. You also have to deal with the formation of the moon, which may have resulted in remelting of the proto-Earth. So it gets a bit complicated within the Archean. And so we stick to the sort of middle Archean. The early Archean, and particularly the Hadean, there's very little really understood about that, apart from, of course, the Jack Hill's zircons at 4.2 billion years.
And I mean, as the technology gets better, particularly in, radioisotope dating, and that I guess will sort of, unravel a bit more, going back a bit older in time.
Yeah, I do think the advent of high precision dating, where it's now possible to deal with one diamond at a time, it's really very exciting, and I do think much of the Archean model, as is already seen at Venetia, is going to be refined, and we will definitely be seeing more in the way of the calcic hardspagites and the lepsolitic diamonds. That picture is likely to become a lot clearer. There also appears to be processes like, for example, craton rifting and then subsequent annealing, which may also require modification of the classic diamond exploration model.
Hannes, would you like to comment on the relationship between micro and macro diamonds? This
Hi,
would be of
Craig.
interest.
Yeah, look, in a nutshell, the micro diamonds tend to be predominantly octahedral, probably because they have been shielded from resorption by being included in xenoliths as well as xenocrysts, and therefore they're not destroyed by the kimberlite. Well, of course, macro diamonds are extensively resorbed by the kimberlite. But apart from that, and looking at carbon isotopic compositions, I cannot see any reason why micro diamonds should be any different from macro diamonds in terms of their genesis. And hence, I think that is primarily why the micro diamond predictions in terms of macro diamond growth tends to be reasonably successful. Where you do have to be careful, though, is it may very well be the case that when you're dealing with a micro diamond population that you're doing your grade predictions with, that those micro diamonds may be somehow skewed towards a very specific population, which in that instance might very well be eclogitic, and you're now trying to predict a mixed eclogitic peridotitic macro diamond grade. And if that is the case, you may very well find that your micro diamond grade predictions is not as accurate as you would like them to be.
No, just to say thank you once again to speakers and also for the delegates for staying so late in their day and starting early in their day, those who come from Canadian side.